We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, everyone. Hope you guys are having a great week so far on this Wednesday, 8/28/2024. So we got some topics to go over, some fun ones actually. And we had quite a bit of earnings. It's been a while since we've been on a live stream here. In fact, there's actually probably earnings we could even go back in if people ask us questions.
When was the last time we did a stream?
I think a month now. Yeah, I think we've been on a hiatus for about a month. It's insane. But yeah, well, public live stream.
Yeah, I mean, we do tons of dude. We do so much private content. Actually, my wife's like, "You're always and then I'm like, "Damn, we haven't done a public stream forever."
Yeah, that's bad. But here we are. All right. So, first topic. Do you want to go over the earnings first, or do you want to talk about our losses?
Do losses. No,
Yeah, that's
our loss is more interesting, and we make people wait to the end.
fine.
Is that what
we'll
we
do that.
string people along?
All right, we'll string people along. All right, too bad. So we'll talk about that towards the end. But of course, some people already know. Do not spoil it in the chat. We'll talk about it. It'll be a very fun topic to discuss. All right, so earnings for today. Let's start with, I think, Nvidia. But the market was kind of funny today. At one point, I think it was down at %, and then it ended down 0.57%.
What,
the
Nvidia ended down what?
No, just the market in general, like S&P 500. I just have VU pulled up, but we'll talk about Nvidia first. So Nvidia reported earnings, and with them, there's quite a bit to talk about. There was a lot of bouncing around after hours if you were watching it, and at one point, I mean, it was down, then it was up, and it was down, and it was quite a bit of a roller coaster. So when you kind of peel back and take a look at what the business had done on a year-over-year basis, everything was just killing it. And so if you're just looking at the past, looks good. Even if you're looking on a forward basis, still looks good. It's just, I mean, at the end of the day, let me first put things into perspective. If you've owned Nvidia since the beginning, you're crying with your $100 bills. Like, you're like, oh, we're down 6% after hours. Oh,
there's that
so
meme,
sad.
And it's like the guy, he's yelling at, it's like the Wojak, and he's yelling at the monk Wojak. He's like, "Ah, I told you, like, you're gonna lose." It's like plus, like 3% year to date, and him it's like plus 400% year to date.
Yeah,
it's basically the Nvidia meme.
Yeah, literally. So the earnings call itself was it's kind of weird. So my main criticism that I had when I was listening to it with the other members was Jensen Huang would be asked a question, and it felt like it was the meme where you're asked Vladimir Putin, like, oh, why'd you do this with Ukraine? And then instead of answering the question, he goes on like the whole rant, Russian lore, blah blah blah, etc. That's what it felt like when Jensen Huang was asked the simple question of, what do you feel about your customers, and when they start thinking about their ROI, what kind of ROI are they getting? And then he was asked the same question again because he didn't answer the question, and then he ended up giving like also not an answer. He basically said like the ROI is instant. So well, that's not what people asked or the analyst. But
what do you think is the real answer in the ROI?
I think it depends, right? So if you think about like, which company are we talking about?
Any of the hyperscalers? Because I kind of get what he's getting at in a way, or like I have my own way of taking what he's saying and interpreting in a way they probably didn't mean.
Yeah.
And then applying that, which is our products are really good and they're really expensive, and by you buying them, you're slowly driving your competition out of business and like making your moat larger. But
yes, he was basically insinuating that there were tools being built today and tools that will be built in the future using their products.
Mm-hmm.
So in short, but yes, he kind of also insinuating what you're saying too. So if we look at, Meta, for example, I think what they've done with their investment, and they've stated that their ads have been improving, like their overall business operations have been improving due to their investments. I think what the question was kind of leaning on was more so on the AI front, and I think it's maybe talking about these LLMs. I think that's the angle the analyst was going about it, but I do appreciate that maybe the analyst's question needed a little bit more depth to it, and because it goes way further than just these LLMs. LLMs are what people like you, people in the audience, everyone is very familiar with, and the average person is at least aware of its existence when they think, oh, ChatGPT, and oh, cool, I can talk to this machine on the internet or in my applications. So I think that when you listen to all these other companies discuss their investment in infrastructure for, just basically housing and analyzing and doing stuff with all this data, it's more than just that. And so I get that it came across as though he just wasn't answering the question. He could have been way more direct. So it made it feel almost like Elon Musk-esque, how he's become more or less kind of famous for that. He didn't make any lofty promises. That's not what he did. But I recall also way back when, if you guys remember, this is just to bring up a quote from him, I think back in 2018. He's like, you save more the more you buy. It kind of was reminiscent of that back in 2018. That was also the same year that Nvidia said that they were not connected at all to crypto. And that was not true. So then it made management look like they didn't know their own business. Of course, the Nvidia of today is completely different. Their business definitely is not. And I think crypto mining has very much moved into ASICs, and the other businesses of Nvidia, or the other businesses that utilize Nvidia's products, have far and away outstripped the demand for what crypto was. So I don't know, like when you look at Nvidia's forward earnings, and I was talking to some of the bulls in our club about this, they still view it as Nvidia looks really cheap on a forward basis. And if you were a doubter, which I'll count myself as someone who was, well, I didn't buy it, so therefore I must be a doubter, because I looked at it at 400. I was told, hey, you should buy this at 400. Didn't buy it, pre-split. And so looking back, look what they've done. They've grown revenue by over 100%. They've grown earnings by over 100%. It's slowing down, obviously, because the numbers are getting so large. But it looks or appears to be the case that the infrastructure demand isn't slowing down. We listened to Google, which we haven't gone live when Google reported earnings, but Google reported earnings. We listened to what they had to say, and a few others, or maybe we might have. It's all blurry to me now. But if we recall what they said, they all said the same thing. We're not slowing down infrastructure spending. We're not slowing down. And when I say infrastructure, I should, emphasize infrastructure, not like bridges themselves. Mm-hmm. Bridges has such a good meaning these days, certain investments, but that's an Easter egg. That
was good.
That was good, right? I was waiting for my opportunity. But I'll find another opportunity later on to insert bridges, But it's an infrastructure, and so Google's been making huge advancements in their TPUs, but they are still using both Nvidia products and their own in-house designs. So when you're on Google Cloud, you have the optionality of choosing between which product, and maybe in the future it becomes even more seamless between them. But the H200s are on their way. And the H100s, while they were really good, the H200s are even better. Google's TPUs have similar performance apparently to the H100s, and may have some better performance case in certain use cases for the H200s, but we'll kind of see how that plays out. It does appear though that the H200s are on a league of their own, and so everyone's going to be playing catch up once again. Gross margins, that was a point. Gross margins came down. So I'm going off of memory from the earnings call. It was gross margin was a concern, maybe. And I don't know if that's a surprise. I even tweeted a meme months ago at this point. If you go on my Twitter, by the way, if you're not following me on Twitter, follow me on Twitter. If you're watching me on Twitter, congratulations. But you can probably find the meme. It was an image that I shared, and it's basically just a funny image of Taiwan Semiconductor kind of hugging Nvidia, and Nvidia's like, "Oh, look at these margins," and then Taiwan Semi's like, "Haha," because Taiwan Semi was increasing prices. Here, if I find it in short period of time, I'll pull it up. If not, I won't waste time trying to find it. But yeah, found it. Okay, good. So yeah, this is it right here. When did I tweet? Oh, you can see it there. So I tweeted this on June 5th, 2024. So it shouldn't have been that much of a surprise that Nvidia's gross margins were going to get a little hit. Taiwan Semiconductor, we knew that they were increasing prices, but hey, it's neither here nor there. But yeah, I also think maybe people were a bit concerned by a little bit drop in sequential growth, but sequential growth, but word vomit. So I'm trying to think of anything else that might have been a concern. Other than that, of course, on a current basis, I mean, the PE, it's pretty high multiple. But again, the bulls, when you talk to them and you ask their opinion, and again, they've been right on it the whole time, not me. It's on a forward basis, it's still fairly cheap. And if you think that they're not going to be toppled anytime soon for the king, for the crown, then yeah, they think it's still a good hold. I don't hold any Nvidia. I have no plans on buying Nvidia. It's just not my realm where I like to play, but I'll play in names that are adjacent to that, one of them being Taiwan Semiconductor. So disclosure, I'm long Taiwan Semi. So any thoughts, Sander, you want to share?
I actually didn't listen to the earnings call. No, you know what I was doing. I was doing more important things. I was looking at companies that actually matter, not these mega caps. But I don't have any semi exposure in my individual stock picking. I don't think I understand. Once AI started, like I thought I had an okay grasp on semiconductor in the industry and how it works prior to 2022. I felt like once AI started, it became like very different.
Hands off, yeah.
So I said, I'm not really going to touch it because I don't understand it like very well. So I don't have any Nvidia. I don't have any other semiconductor exposure in my individual holdings.
Oh, that's fair enough. Here, I'll start your question on Baba and Wynn Resorts. Well, actually, you know what? We can answer this now as a little bit of a break between this and the next stock. So the next stock that we'll be discussing is, well, you choose. Do you want Salesforce or CrowdStrike?
CrowdStrike, because you were just talking on Nvidia and I didn't look at Salesforce. So,
all right, fair enough. So this question here, thoughts on Wynn Resorts and Alibaba. By the way, you guys can ask your questions, and what we'll do is we'll be starring them if it's not a good time to answer it. So I'll just star it. If I don't end up answering it, feel free to ask it again. There's no harm in that. And then we'll try to answer it towards the end of the show. So thoughts on Wynn Resorts and Alibaba. All right. So I've looked at both. One of them I've talked extensively about. I'll start with Alibaba.
Mm-hmm.
Okay. So there's probably 13. Well, I don't want to exaggerate. Let's say between 6 and 13 hours. I'm going to give myself a wide range for the sake of accuracy. Between 6 and 13 hours of content on Capital Mindset just on Alibaba. I recommend if you want to, you can go give a quick dive. The Spark Notes is I don't find much of any value in these entities just due to their structure. So you don't actually own anything. You own paper and a contractual arrangement between various entities. This is the entry point at which you start to learn about what a VIE is. A VIE can look like many different things. It's a umbrella term that describes a way to create a structure, but that structure itself can be, designed in many different ways. There are American VIEs, there are British VIEs, there are VIEs everywhere. Not all VIEs are bad. The tendency, however, upon observation is that variable interest entities tend to be designed to protect someone inside the company for whatever reason, to protect them against you, to basically reduce your rights. So in this instance, it's a fairly unique VIE. It's probably one of the worst I've ever seen. And this is true of most Chinese cos. Because since you are not allowed to own the actual shares, they create this whole convoluted scheme where they basically create, the mixture between a debt-like instrument, a contractual arrangement, and an equity arrangement. But they take the best of both for the issuer, not for the receiver. So, typically in a contractual arrangement, there's a time stipulation of capital return. In this case, there is none. However, it is not an equity ownership. So it doesn't have the benefit of equity ownership, and it doesn't have the benefit of a contractual arrangement. Therefore, to me, it is not worthless, but it is probably close to worthless in my view, in my eyes. What I would have to pay for it is almost nothing, under the potential that the laws could change. That's the only reason why I think it has any value, because underneath it all, the actual company Alibaba has obviously some value. Yeah.
Even I don't even think I'd want to own the underlying company if I could right now.
Okay, we have starting some questions. Yep.
Okay. Because I agree with you. I think the VIE structure and really the entire attitude, it feels like, of the Eastern, primarily the Chinese, towards Western markets is, we'll use you for liquidity.
Mm-hmm. Yeah.
And I mean, the government literally has a rule saying you can't own our companies. And so they have like a funny way of making this VIE and getting around it. But like at the end of the day, you don't own anything. I mean, and the retail investor could make the argument, but Andrew, what's the difference between your Alibaba shares and your Amazon shares? I'm like trying to think, like, what if we talked about public? But and it'd be like, fundamentally, your opinion, your vote doesn't matter on either of these. Like, in some way, they could argue both of these are just a piece of paper, because your ownership in Amazon, you're not going to have any rights. Amazon's going to do whatever they want regardless. The difference is that Amazon does have people, which is the retail at the shareholders who are large, who have the same interests as me, who they report or who they are responsible to. Alibaba does not. Alibaba is responsible to the people that own the actual company in China, probably.
Yep.
And that's really it.
And that's stepping away from the real, very legitimate political risk, geopolitical risk that may or may not actually be, a problem that someone has to face. Look to none other than companies like Gazprom, that if you had owned, those were zeroed out. Something were to occur similar with China, that would also be zeroed out. So,
The other thing is you also have to factor in, there's a lot of economic issues in China right now.
Oh yeah, for sure.
So then you have to factor in that as well. Have you really looked at Wynn though?
Yes, I've looked at Wynn.
Okay.
So I can talk to you about Wynn too. So Wynn Resorts within the American segment is A-okay. The part that makes me pause is the Macau segment for similar reasons. It's mainly, again, political risk is one of them. So you have to worry about this, gray rhino out there in the middle of nowhere that might actually end up coming to screw you over. And there's also the capital control restraints. So when companies, American companies too, and they try to get money out of China, they have to abide by certain laws, local laws that can restrict the amount of capital outflow that they do to their, from their subsidiary in China to their main business in the United States. Some companies way back when, so now this is, we're already in 2024, so it's going to soon be like, I think it was like almost 10 years now. They used to report their cash that they held in foreign accounts in China specifically. When they had a significant material amount. And they used to do this. It was nice when they did. And you could maybe determine the risk factor of like what would happen if that happened, et cetera. But if you don't think that's a risk, then Wynn is not, I don't want to say cheap, but it looks interesting because at some point you will have, and I think all casino stocks, by the way, well, not all of them. There's actually one that's doing really well. But casino stocks like Wynn Resorts, MGM, Caesars, they're all doing pretty bad because the idea is consumers doing not so hot, and gambling, particularly physical casino gambling, may not do as well. Wynn and some of these other ones are more exposed to Asia gambling. And if the Asian markets aren't doing as hot, then you'll probably see that reflected in the share price. Okay, so
And I haven't followed Wynn really at all. I know that there's issues, like you said, to their China exposure with Macau, but I don't know like the materiality of that for any of these companies.
Yeah.
I don't know how they do in an economic downturn. I would assume not great, but I could also see like the flip side being like they actually do okay because like gamblers going to go to Vegas and gamble.
They're higher end,
right?
But you said something very important: gamblers, traveling gamblers. Wynn Resorts is not known as the local gamble spot. There's another one that is.
Right.
That
one's doing fine.
Yeah, that one's actually doing really well. I'll go ahead and give you the shout out for it.
I think it was up today. It's just been ripping.
This one was pitched from our other analyst who's not on with us, but he's this other analyst. He's on our private live streams, and so he pitched this a while back. Red Rock Resorts. So this is a hotel, a local hotel in Nevada, Las Vegas, and so this is the one that the locals of Las Vegas will go to. There's a lot of differences in the actual business strategy. So Red Rock Resorts will actually own the real estate. Companies like Wynn. MGM is no real estate. Caesar is a mix. So some properties they own, some properties they don't. Red Rock is they own all of them. Wynn Resorts actually just monetized, I think, the Boston property. So they did a sale leaseback to Realty Income. Well, whether it's a joint venture doesn't matter, but they don't own it anymore. But Realty Income was one of the buyers. Or was it Realty Income or was it someone else? Either way, I know that they got rid of it. And then I know that the Bellagio's another deal that was taken, but that's not Wynn or any of these. So I don't think that they're going to do a sale leaseback, but it's basically like a real estate play coupled with a casino business that has lower buy-ins. So it's known as the cheaper place to gamble. So yeah, but hopefully that answers your question. I think Wynn Resorts looks cheap on paper. If you're comfortable with the other risks, I think you could do fine. It's not the gambling stock that I'm personally interested in buying personally. So.
I don't know. I feel like it's one of those stocks that falls under the like there's a lot of stocks that fall under like the like if I'm going to invest in that, I might as well invest in the S&P 500 type. That's kind of how I feel with Wynn.
Trying to catch up with all these questions.
Haven't gotten too into, man. Yeah, we got this backlog now. This is the issue with doing this spare boat. But
all right. CrowdStrike, Andrew, take us away. CrowdStrike.
Numbers were bad. I didn't listen to the call. I remember it popped on the earnings report, and I was like,
Call was boring.
To be fair, if it's a boring call, it's a bad CrowdStrike call.
It's a boring call.
And I said this, I was like, CrowdStrike gets on there and like slaps around, makes fun of other people, basically, usually. SentinelOne tried to do that yesterday, but SentinelOne's just kind of pathetic in general, and so they tried to like do that, and no one really cared. Like they reported yesterday. But basically, CrowdStrike's an expensive company, and they are dealing with the whole, what do you call it, outage. And the problem with CrowdStrike is their reputation and their brand has been, we're the best, and they have been the best. The issue is if you have root level access to computers, you better not mess up your code, or it's really going to do a lot of damage. It's part of the reason that they were so good at detecting and fighting hackers, is because if you have that kind of level of root access, you can make your systems can quickly identify that's a threat, that's odd, this is abnormal, and kind of take care of it. The issue is that if you're not doing good enough QA on your updates, or at least rolling your updates, you can have this kind of problem. So with a company that's as expensive, they can't anymore come out and say we're the best of the best, kind of pound their chest and then go from there. Now they're kind of just like, oh, it's okay. I mean, we're gonna guide down, and operating income is going to be a revision down from previous by 15%. And to be fair, I mean, the market's kind of priced it in, right? Because before this, what were they at? 350, and now they're at 260, 270. But it's one of the reasons that like I got out, and every day I'm like, okay, I'm glad that happened. I still think it's a wait and see. You're not going to know what's going to happen until I'd say like another 2 quarters. Then you'll start to see the impacts of like people doing RFPs at other companies. And if CrowdStrike is as sticky as and as good as they think, and we'll see what happens from there. Palo Alto made some comments that they had gotten some RFPs, I think, from CrowdStrike clients, but Palo Alto's very above the waist. They're not going to take any pot shots. And so they were just like, they didn't really make any comments on that. Like I said, SentinelOne tried to go after CrowdStrike, but SentinelOne's like, they're like a midget trying to fight with the big boys. I don't know. It's like everyone looks at them, doesn't really care. So that's the thing on but the thing I'll say about CrowdStrike is the earnings were not a disaster. By no means I would call them a disaster. It's just at this price and with the kind of uncertainty going forward, like their net new ARR was actually, I thought, pretty good. I think their net new ARR was like 220 million, which is an increase from last quarter. But you're going to see the impacts of this on net new ARR probably the next 2 to 3 quarters, and that's what you want to watch.
Yeah.
So that's kind of the quick.
No, I agree. Okay, so I mean, I still have like my extremely infinitesimally small amount of shares.
Oh, you do?
Yeah, but it's because it was whatever.
Is this guy a bot, or is he just?
All right, so
that was hot. I like look at the comments and I'm like, what is he saying? At first I thought it was like one of our members just kind of trolling, and it kept on going. That's like, all right.
It was like biotechs. But all right, so Salesforce, right on to Salesforce. So I for full disclosure, I hold a position Salesforce for quite some time. The market thinks the earnings were good. I thought the earnings were fine. It's more or less the same. So the original thesis back in 2022 was that Salesforce, to repeat it, was going to turn on a spigot and decide to focus on cash flows. Fast forward I think it's a public video, so you can go on Capital Mindset and go to Salesforce, and you'll be able to find the video. So it's the tail end Q4 of 2022. The company was going to focus on providing what do you ever want to call it, efficiency, but they were going to focus on growing cash flow. And with that cash flow, they could be a lot of returns to shareholders in the form of buybacks, dividends, etc. So fast forward to now, we have a dividend, we have buybacks. We have a company growing cash flow. So the cash flow is growing quite nicely. It grew over 20%. Top line, though, actually came in weak in terms of the guide, which was the sour spot of the earnings. Maybe if it didn't, it would be up even more. But really, it's because they're setting the expectation. And so when they set the expectations, they control the narrative. So even with the last quarter where they had the big dip, they were still setting the expectation in the new narrative, saying, hey, what you need to focus on is how are we doing with our cash flow? So driving operational efficiency, increasing our cash flow margins, etc. So of course, with the shenanigans that people might rightfully point out, that if you also consider the impact of SBC, it's not as impressive because they're effectively reducing their GAAP net income isn't showing the same reality as their cash flows do. So that being said, like I just said, I think that they've done a very good job at setting the expectations and controlling that narrative. The whole narrative of SaaS being dead that was prevalent, last quarter, I think was a bit too early in terms of judgment. And so I think many of the club members I know took advantage of that. And there was quite a few SaaS names. In fact, some of the software developers were like saying, I'm building a list right now of things I'm going to go buy. There were some of the names off the top of my head were, like ServiceNow, Salesforce. There was, what was the other one that's not as impressive? But there's Atlassian. I think that was on people's watch list.
Are we still waiting on Atlassian? Because like I think it just keeps drifting down, but it
was just incredibly expensive.
It's like it'd be cool to own Jira, but and is it Confluence is the other one? But at the same time, it's like, and the growth doesn't seem super impressive. If I remember right?
No. I think you also, if you judge it from stickiness. Mm-hmm. I know that their products are very sticky. So are Salesforce, but you're getting Salesforce, I think, for a much better valuation with growth, and they're bigger. So they're growing and they're that size, which is impressive, especially when you think of that SaaS is kind of in a slowdown right now. So they're still growing top line by 9%. It's not nothing. It's not as impressive as it once was, but it's not nothing.
Yeah. I mean, yeah, I don't know. I think my SaaS choice is probably like Chegg.
Oh, he accidentally closed his browser. This happens from time to time. So, the show must go on until he comes back. But yes, so it's so funny when it happens.
So never mind on Chegg. I don't know if you caught that. I'm not going to do Chegg.
That was too funny. All right.
I think that there's like an over people like selling off too much on basically. I think the SaaS sell-off has been people saying businesses aren't hiring. They're letting people go. Less seats equals less revenue equals less growth equals sell SaaS.
Yeah.
And so you've been maybe able to pick up some good companies. I know people like Datadog. I've never really looked at them. It's like one of those things that's outside my circle. Like we said, the one that I thought was interesting was Atlassian, but it seems expensive.
Yes, it does. And to be clear, like for Salesforce, I mean, I did accumulate more shares on the recent dip, which was the last earnings. I'm not really interested in buying any more Salesforce. I'm completely content with it. I'm just collecting the dividends. I'm not even reinvesting the dividends. I'm just letting it do its thing. If they buy back shares and they reduce the share count in that way, I effectively will own more Salesforce, but no real desire. I was actually expecting to see what the volatility was going to be today after hours, and depending on what it was going to do, I was going to do some sort of options trade via puts or calls selling. But this is not anything significant. I'm not going to be doing anything with it. So, yeah. Anyways, moving on to, I think we covered everything. If there's any questions on Salesforce. Oh, I see one from Rob. Why did you consider Now versus CRM? Yes, except I already had a position built out in CRM because my CRM position's been built out since 2022. I'm actually curious. I think maybe Now even performed better. I was told by some of our club members that ServiceNow is also one of the better ones. And I think, let me actually do the judgment call here. No, I think I did better with Salesforce. But not to take away from ServiceNow performance. It also did very well. Mm-hmm. So, yeah.
Yeah. Yeah, because you bought around the 140s for ServiceNow, huh? Or not ServiceNow.
No, not ServiceNow.
Salesforce.
No, lower than that.
Was it? Okay.
Yeah, 120s, and I got some a slight lower than that. Yeah.
Mm-hmm. Well, my thing is, it's like going back to staying in your circle, dude. I feel like I'd have to do a lot of research to even understand ServiceNow and like who's even a competitor to them. They're a ticketing system, right?
Mm-hmm. I mean, they're great businesses. They're very sticky.
Sure.
You talk to people who work in software, and they'll say, or IT, they'll say like, these things, they're not going away. Once they get a customer, it's like they're stuck there. So, especially like for products that Atlassian has, it's like you don't want to disrupt workflow. So if everyone's just used to that workflow, disrupting that workflow could be detrimental. I mean, the same argument kind of goes for Salesforce. Salesforce has a lot of programmability, stuff that Excel doesn't have. There's a lot of things you can do in CRM within the CRM ecosystem that you just can't do inside, like a traditional Microsoft Excel, or it's a little bit more difficult because Salesforce has built tools for it.
Well, yeah, because like Excel's not built specifically for anything. It's just kind of like, I mean, yeah, it's a spreadsheet. It is the spreadsheet. I'm not talking about on Excel, obviously. If you have a curated system, I mean, like I could technically do all my accounting in Excel, but that would suck.
Yeah,
I would want to do that. So like, and it's the same thing I'm sure with Salesforce and everything. So
you know what the great example is? It's like Excel is like a hammer. You can do a lot of things with a hammer. Imagine if that's the only tool you have. Some tasks are gonna suck with that hammer.
Hey, you got to go file, file something down. Hey, go file it down. I got a hammer. File it down.
Exactly. Cloud AI disrupts CRM. Yes. So that's actually something that I don't think CRM is indisruptible. I think at the end of the day, they're like, I like to use this analogy recently. A lot of these software or SaaS businesses, I have to consider it this way, that it doesn't mean they're going to go away, but they're like mods. Like you're playing a video game and they're like mods. So some mods are never going to be replicated by the developer in a video game. We all know this. If you all play video games, you all know this. But some mods, they may be just temporary fixes and the developer fixes it and the developer does it better. Sometimes they don't, by the way, but sometimes they do a good job.
And the difference is you don't have access to the source code unless you're the developer.
Yes. So at the end of the day, when you're dealing with like cloud service providers and everything else is built on the cloud, the company who has the utmost advantage, if they capitalize on it and focus on it, is going to be that cloud service provider that you're doing all your other stuff with. Salesforce is not a good example right now, but a good example more or less is what's happening with Databricks and Microsoft. So from conversations we have with real world professionals who are making these hard decisions today about the switch, and it kind of is like, you got to think about the switching costs where they were building products for Databricks on Databricks, not for Databricks, but they were building products using Databricks for their industry or for their organization. And then suddenly come to find out that, and they're using Azure, come to find out that Microsoft itself is building a lot of competing tools that just work really seamlessly already within Azure, do more or less the same things. And then you're kind of like, wow, we spent a year doing that, and they're leaning on the decision. I haven't confirmed with this individual, but they're leaning on the decision that they're just going to go, yep, I know we put in all that work, but it's easier to go this way, which is crazy to think about. But it's kind of like Databricks and Snowflake are the mod for the game, and the game you're playing is Azure. And then Databricks and Snowflake are these mods that you download, and then you make the gaming experience, more fun, more curated. And of course, Azure, Microsoft is like, yeah, of course, offer these services because you make our ecosystem more complete. You complete us. But then once they kind of figure out what the customer needs, what the customer wants, and how they want it, then Microsoft can, after they finish settling this down, they can start to focus on, can we offer additional services, draw for the revenue through our cloud business. It's going to be a while before they even maybe consider coming after CRM, ServiceNow, and all that. And even if that's possible, because they might not be equatable to that example I just gave, but it's something that you should consider. And I do consider. I'd feel more comfortable for me owning the hyperscalers than the additional add-on services. I think just 2022 was a really rare year where a lot of these names were just like, you threw a rock and CrowdStrike. I should have bought way more CrowdStrike in hindsight. That thing was in the 90s. But
yeah. Remember when that's one of my when I was pounding the table in the 90s, I was like, guys, this is insane. Or it's been but you can't be too upset because you were on Meta in the 90s or 100, somewhere on there. You were on
Amazon,
Salesforce,
Salesforce. Yeah.
Amazon. So like, yeah, there was just people were like, I think people were preparing for a much worse economic reality because of the hike in interest rates than actually happened.
Yep. Correct.
Mhm.
Okay. So that concludes Salesforce and all that. We have a new CEO at Starbucks.
Do we want to do questions or do we want to do?
You want to cover the Starbucks? Let's do Starbucks then. I mean, that questions. Okay. So we did this one.
Tell me how you really feel.
How are you tonight?
I'm good. How are you?
I'm good, Dex. Thank you.
Thank you, Dex.
All right. Consumer staples companies you guys like here. Pepsi, HSY. Why are you cringing? Why are you upset?
No, I'm not cringing. I'm trying to think.
Oh.
Yes. Yes, I'm very long one consumer staple. Although I think incorrectly, in my opinion, they get categorized as a consumer discretionary, which is Musa.
Oh. Yeah.
But that'd be one.
I have BTI. That's a consumer staple.
Smoking is a staple. See, I am your distributor.
You're my distributor. You're my dealer. Let's call it.
I'm your dealer.
You're my dealer. You work them corners.
Well, I have a front. My front's the gas station, and then people come in and like, oh yeah, you want the stuff.
You want the stuff back there?
Like, yeah,
I got the stuff back there. What do you want? What are you looking for? Camels? I got camels.
Is that what they are? Is that Marlboro?
No. Marlboro is Marlboro. Don't ever say that again. Don't offend me.
I don't know the
Camels. So they have
Camels
Reynolds American brands. Yeah. And yeah, but Camels is one of them. Camels is like the one that a lot of Americans know for cigarettes. Not that I would know. I mean, I've never smoked cigarettes in my life, but I've spoken to.
You look like a guy that likes a good
cigars. I dabble.
I was gonna say like menthol cigarette, but all right.
But yeah, like that's a consumer staple. We've talked about. Well, we're going to talk about that later, but there's another staple we talked about. I like McDonald's. I'm going to kill two birds with one stone. McDonald's, but I think McDonald's has run up a bit. It was really good recently. It's not really a staple, like consumer staple ish. It's food, but when it was around here and we last talked about it on a live stream, I thought it was really good, and I praised it. One of the examples I gave is one of their value meals. They actually bullied Coca-Cola of all companies to pay a portion of the expense for that value meal. Who bullies Coca-Cola? McDonald's does.
That's actually insane.
Oh, okay. I shall unserver deafen you. Join voice chat, and then I'll.
Oh, I forgot.
You. I forgot. So too. Just join one of the voice rooms, and I'll just undeafen you.
I'm just looking at consumer defensive or consumer staples.
You know what this makes it look like? It just makes it look like we deafen people randomly, and then you have to pay to get out.
It's deafen roulette. We just wake up and we're like, hey Fabio, what do we need to buy some more stocks today? We need another $100. All right, 50 people, go.
Deafen them. All right, I see you. I'll undeafen you. All right, he's undeafened. My job is done. My task is complete. The super chat terms have been met.
My other thing with staples is I know this isn't a staple, but sometimes I look at some of the big tech companies. I'm like, they're just going to continue to make money. I don't know, but
yeah,
true consumer staples.
I think Hershey's was
Murphy's.
good.
Hershey's is really interesting.
Yeah, Hershey's is probably one of the more interesting ones.
Mm-hmm.
Pepsi is no longer interesting. Pepsi was interesting a little bit.
Would you consider an AutoZone or O'Reilly?
No.
That's discretionary? I wouldn't say it's discretionary. I feel like
I think discretionary is, it's a needs-based business because you need to fix your car if something happens to your car.
Mm-hmm.
And if people might not know this, like when we're talking about O'Reilly and AutoZone, O'Reilly in particular, they have a lot of business that they sell with mechanics. So that's how a lot of mechanics get the parts supply. So you may not do it yourself, but you'll go to a mechanic, and then the mechanic will be getting it from O'Reilly.
Right.
So, man, I don't know. Staples, like maybe alcohol companies too. There's some in there.
Not right now.
Okay.
I wouldn't touch them.
Okay. Whoa. That is what piques my interest because everyone's having that reaction right now. And I know Bacon, if you're probably in the audience, Bacon, but Bacon's been asking this question for quite some time in voice chat. He'd do like a channel check in the sense of like sentiment. He'd be like, anyone like any alcohol companies? And everyone's always been like, oh. So one day they will be, but we have a couple like Diageo. There's Bacon. You see, I am here.
Yeah, it's like that scene from Lord of the Rings. So it's like one day alcohol companies will be good, but it is not this day. This day they're shit, and that's been every day for the past like 2 years.
Hey, was this the bottom, Andrew?
Diageo,
like spirits, people drink alcohol through thick and thin, pretty much, but it's about the supply that was off course. And then you have Molson Coors, which I think is like. I have a soft spot for Molson Coors. It's not the highest quality company, but I've been following them since like 2017, and I've owned them in the past. Like I have owned shares of Molson Coors. If you guys are from or been subscribed to Capital Mindset, you guys remember probably the way back when old portfolio updates when we did own Molson Coors. We did fine on it, but Molson Coors, the reason why I have a soft spot for them is that they set out a plan. Oh, Brown Foreman, great also. But they set out a plan that, effectively they were going to pay down a ton of debt. And what happened?
How is he just came back and called us Nazis? Who is this man?
I think it was something about earthquakes, and he has a product to save people. But Molson Coors, they set out a plan to pay down a ton of debt, and they ended up doing it. So that's kind of like my soft spot for them, where I'm like, hey, you accomplished it. You're accomplishing that goal. Good job. So I'll pay attention to you more. But yeah, I've been following them for quite some time. I remember way back in the day when they had a ton of debt. So like 2016, 2017 era.
What's going on with Anheuser-Busch, Ambev?
Terrible company that I don't like. I just hate them.
I just was wondering because I know there was a lot of negatives on them too. I just don't. I'm not interested in any of these right now. Like I said, there will be a time to buy them, and you're probably gonna have to plug your nose and just go in and buy them at some point and say, you know what, I think this is it. Plug your nose and buy them. I don't think it's right now, though. It's from what I've understand. But I'm not particularly interested in them right now. Not with the supply buildup we've had. And I mean, like I said, I don't know what these are, if they're even that cheap right now, like, because the sell-off could be fundamental related. So like, it might be. The other thing too is like, it seems like each younger generation likes alcohol less than the previous generation.
Oh, it almost seems like they want something else. And there's a retailer in Canada that's, oh, so ripe. I'm just joking.
Oh, you're talking about caffeine, and the retailer is
yes, caffeine. That's the one.
That's what I thought. Yeah, everyone wants caffeine.
They're talking about caffeinated beverages.
Mm-hmm. Which is really
Schedule nothing.
Yeah, it's already out there. It's should be a controlled substance, though. It's terrible. I mean, it's just so bad for you. Diageo is way off from its forward multiples, to be fair. Like its historical average multiples. You'll have to go back to kind of like 2014-ish to kind of hit these historical multiples. It's just, I don't know.
For Diageo?
Mm-hmm.
In terms of it's high right now or low?
It's low. But if the forward multiple is wrong, or if the forward estimates are wrong and they undershoot, then it's not that cheap, you know?
Yeah.
But
Well,
yeah,
it's something to consider.
Outside of like, you know, a blip in 2020, yeah, it's the cheapest.
Yeah. And Ben Love, to your question, yes, they did. They pushed it to a hearing later this year. And anyone who is invested in that changing in the United States, you are foolish. You're speculating, not foolish. You're speculating. I think there was a reasonable kind of inference from certain events that you could make an argument that you thought likely it could have been. But I think buying a company and going crazy into that company because you thought that was going to be the outcome. Yeah.
I just think holding anything, I should say MJ, can I say that related? I don't know what I am and not allowed to say.
Let's call it not caffeine.
Not caffeine.
Not caffeine.
I just think holding that into an election, you're just playing with sentiment at that point. The sentiment's going to swing back and forth, and it might not matter who's elected. It might just, because someone gets elected, it might just be like, well, now that someone's elected, they don't care.
Yeah.
You know, I mean, who knows?
Not caffeine could always be like a key to jiggle, you know, on
Mm-hmm.
the people being like, hey. So, yeah. All right. So that answers the question on consumer staples. And so this question is good. Thoughts on Nubank, since these retail YouTubers are bad at explaining their analysis. All right, so Nubank, believe it or not, is actually one of the more interesting neobanks, foreign neobanks. There was StoneCo that I didn't like as a fintech. Nubank, though, is a more legitimate, and we talked about it in the past in like different live streams because I've been asked before about Nubank. So I don't hold any Nubank, no plans to buy any Nubank, but I respect the business and what they're achieving. So the history of the company is more of a taking a new or Western style approach to banking within Latin American markets. For those of you who may not have, you know, experience banking in Latin America, sometimes it's not very good. There's a lot more distrust of banking in Latin America among the general populace. I can go on with like different stories in many different Latin American countries of, you know, family members of mine who've experienced kind of crazy things that you wouldn't imagine in the United States. So, and this is not all banks. Not all banks are bad. But Nubank is one of the fastest growing neobanks that's digital first, so has a digital first experience. And a lot of foreigners who live abroad but are from that same country will actually utilize it to transfer money back and forth between family members. And so it's a fairly easy to use UI, etc., all that jazz. And there is, you know, just a general concern I have about, you know, with any bank is like when you grow really fast, well, banking is a commoditized product. So when you're growing really fast, you're probably giving up something is the case. But that may actually not be that true with something like Nubank, because I'm not joking. Some of the legacy players are really kind of sitting on their hands with maybe a little bit of aura of arrogance in terms of like just, oh, we're just better because we're the older banks. And then Nubank, which I like the name Nubank, neobank, it's a new bank, is really trying to take market share from the lower standing customers, how a lot of these fintechs in the United States try to work. And then they're also expanding in some of the middle income markets. But remember, middle income for some of these markets is not middle income of the United States. It's, you know, going to maybe look like our lower income. But for those countries, it's middle income. So if you grow in scale and you just get a lot of volume through your platform and a lot of lending volume, but also transactional volume, you know, there's a lot of ways to monetize that. And all of Latin America is their oyster. They're growing really nicely in multiple Latin American countries. There's a lot of people down there, and all those economies are still growing. I think that there is hope for them in the sense that, you know, coming out of some of the struggles that many of them go through and will go through, There's hope that they can rise through the ranks, economically speaking. And so a bank is one way to play the economic growth of a region or a country. So, but yeah, as far as like, valuation right now, if they continue, what I recently saw was their growth trajectory, which, as a reminder, I think it's like in excess of 40%. Was it?
Really?
Yeah, let me make sure. I'm talking about earnings estimates. Yeah. Well over. So like it was in excess of 40% for 2025, but for this year, for context, it's 80 something percent is what they'll finish off with as far as the estimate goes. And we're throughout most of the year. But yeah, for next year, I remember correctly. I just wanted to check, but it's 44.88%, middle of the estimate. And then the following year, it's 36.7, middle of the estimate. So if they keep hitting those figures, I mean, you're seeing a below 20 multiple, and still a fast growing bank by 2026. All these people who are obsessed with these. Yep.
My question is, why are they growing fast? Like, I get what you're talking.
That's the concern. That's right. The one concern. Yes, exactly. No, that exact question is my concern.
Right.
Because the bank.
So, yeah, because like we've talked about this before, but any bank, and people might not believe this, if they wanted to, Wells Fargo could grow that fast. Well, okay, actually, not Wells Fargo. Any other bank.
Can I pull up this guy's comment?
Yeah.
I don't know if you're from Brazil, but I'm just saying that's how a lot of people feel.
Yeah, really.
Yes. No, I'm not joking, because like American investors sometimes do not understand how a Latin American person in Latin America views banks. It's because United States and banks have a completely different history.
If that's how they view them, like, how do these guys make revenue? Because is it loans? Do they do loans?
No, so, I mean, first of all, I think it all begins with like the establishing the trust and kind of saying we're different. We're going to do things differently. Then yes, it's about extending loans that are a bit more fair. So one cool thing. So Brazil, if you want to buy a house, the down payment you have to take. Well, this is more about we're going to get too deep into the topic, but long story short, you got to put down a lot of money for a mortgage. And so this has made what I'm going to put on quotations, banking inaccessibility. And this is true for a lot of things. So just lending to people who don't have lots of money is just extraordinarily risky, or considered extraordinarily risky. And the interest rates are, well, of course, they're going to be different. But the point is the down payment requirement is insane. If you want to know the detail, it's not because the banks are evil. It's because they can't take the home away from you. But that intentionally good law turned out to be something that was unintentionally bad. But yeah, there's an example.
Yeah, because the one thing I wonder is like if the mentality towards banks is already so negative, the mentality towards loans can't be that positive either. And so I would feel like you could have a high default rate.
Yeah.
And then the other question is like, I mean, they're a pretty large market cap. I mean, $70 billion. This is a big bank.
Well, they're not going to be, they're not a Brazilian bank only. A lot of the business is in Brazil, but they're going to be all Latin America, it seems.
No, I understand that, but I'm just saying they're big.
Yeah, they're big.
And growing earnings, I mean, like, so they're growing, let's just say what the top line growth is estimated to be. So end of this year, 11 billion, end of next year, it's 11.3 billion, end of next year, 14.6 billion. Is it mostly loans? Is it mostly some ancillary services? Like, I just don't know this company. It's an interesting company. And I think most people like this, you're always a little worried about a LatAm company and the political risk there. But I just don't understand them well enough to really understand.
I can break it down for you by their KPIs. So like the credit card business is their largest business from revenue standpoint, and it's 3.4 billion. Interest income 2.3 billion from their lending business. Sorry, I should say that interest income from lending is 2.3 billion, and then they have an other category interest income about 1 billion. So let's see, fees and commission income 1.7 billion, and that totals out to an interest income of 8.3 billion with total other revenue, fees and commissions on a total revenue of 4.9 billion. And then the breakdown in geography is Brazil's the massive super majority here at 7.5 billion, with 409 million in Mexico. Colombia looks like it's just ramping up at 98.5. So, I mean, I think Nubank presents a. By the way, their management's a lot more westernized in like how they view things. I recommend just like going and looking at to how the company started, where the management team come from, their whole story, their whole professional backstory. Again, I'm not saying I'm investing it. I'm saying that I see the case for it, and there's a risk that I'm not going to be taking, but I think you're going to be rewarded if you take that risk here. Like I can see the path to victory. There's some banks that people, from the United States, maybe we talk about them, but people sometimes complain we talk about them too much. But like, I genuinely do not see a path to victory.
Right.
Like I will be honest and say, oh yeah, there's a path to victory for that stock. I don't want to take that risk, but I could see it working out. Here's an example of a fintech that, a lot of retail people love. Robinhood. I see a path to victory for Robinhood. Do I want to partake in that? No. But if you're invested in Robinhood, like I see it,
right.
I see its path to victory.
No, I mean, that's the thing is there's a lot of companies, equities, everyone say it, that are interesting that you're like, oh man, this looks really good. And I can see it plays out. But maybe you have a list of 10 other companies where you're like, well, I just like how these play out better.
Yeah.
And if you fall in that camp, it's like, okay, yeah, like it looks really interesting. I don't know enough about like the regions they serve, the customers they serve to feel comfortable with it. That's my issue.
Yeah.
But like, I mean, the growth is the growth. So
yeah, no. And if we wake up, 1 year later and it's like at $30 a share or $20 a share, I wouldn't be like, oh my gosh, that's impossible. No, it's possible. Rob, that was the company we're alluding to. SoFi, I don't see it. I just don't see it with SoFi, but I see it with Nubank. I see it with Robinhood. I see Square. There's a path to victory for Square. Like there's a lot of fintechs that there's a genuine path to victory, but then it's about me being, as an investor, being comfortable with the risk reward and then choosing to participate or not. But that doesn't mean that it will or will not work out. There's plenty of stocks out there. In fact, most winning stocks I'm not going to invest
in. Right.
So,
well, you can only pick so many.
Exactly. Yeah, it's impossible.
Yeah.
But I will be honest and say when I don't really see a path to victory for a stock, and SoFi is one of them. And I have no idea why it has a lot of attention, but yeah. Even PayPal has a path to victory. I don't want to participate in that, but it does.
Right. I agree with you.
Yeah.
I mean, I can see PayPal actually doing very well from here. If they do the turnaround, they do a bunch of capital returns, shareholders, they improve margins somehow. It's theirs is pretty easy to pencil out actually. Just looking at it briefly, but I love you, Boba.
He's always practicing his Spanish with me. So to answer his question, I'll answer it in English, but the question, I think for the economy of Argentina, over time, if they are able to do some of the corrections, I'm not going to get political, but they could have a path to recoverability. And Mercado Libre, I love it as a business. I see very strongly a path to victory for that. The valuation, different conversation that I'm not going to get into because I haven't done like a refresher on it. Let me pull up the stock though. But if you've been holding Mercado Libre, I think maybe it's debatably at fair value to maybe even cheap, depending on what you're projecting out. And I think it's been a strong winner. You keep going with it. All right. Well, you do what you want, but I have only good things to say about this business. Unless something comes out that's completely different that we don't know of right now. All that I know currently, I only have good things to say about it. So we'll put that in the stars, and we'll get through all the rest of these stars. So that covers this question. Okay, so servers are good, but what about semi trucks? Looks like we have been years of record upgrade cycle emissions. Okay, well, we already talked about this, Kale, tons of times in private.
He wants us to do it publicly. That's why.
Okay. I mean, yeah, you if you want the well, you already know. I'm kind of preaching. Because he knows he wants us to tell everyone. Well, Kale, you let me know. Do you want us to talk about your ideas on this? I'll put your question away for now. We get confirmation from you. Thoughts on hymns?
Didn't we just talk about this? Oh,
well, we didn't talk about it publicly. That's the thing.
Yeah.
What the hell is this after?
What is?
It's actually, it's getting it up. Huh? Oh, you see what I did there?
I see. It's like an 18-year-old up, down. I see. Never mind. But hymns, I don't see a large moat personally. I don't see a large like something that really gets me excited, like the thing that this can really grow. The other thing is, so they're selling GLP-1s because of the shortage. They can do compounded GLP-1s, right?
Mm-hmm.
And they, especially in the last earnings call, people said after the last earnings call they didn't get why him sold off. The reason was really clear. They said something that was kind of like poking at regulators about GLP-1s. And so Longs didn't like that, where they were like, oh, you shouldn't be poking the bear. And that's why it sold off. So I just don't have a massive interest. Like, I don't see where this company goes, and it's hard for me to imagine. Like, maybe this is a thing of like an anecdotal. I don't see, I have a full head of hair. Everything works fine. I don't know a whole lot of people use their products. Maybe the target market, maybe the TAM is larger than I think. But I'm just, I don't know. It's one of those things that like, I don't hate it necessarily. I just don't, I look at it and I don't spend a lot of time on it because I don't really find it that interesting.
Yeah. The stare.
It's going Dan.
Hymns.
Why? I never understood it, even when it popped. I don't know. But like they are, I don't know. Do you think people were aware that the GLP-1 was a temporary state, that they could supply that?
The bulls in the club are saying that, that's a misunderstanding, that it's not even part of the thesis longer term. I'm trying to be devil's advocate because they're not here to defend themselves, but trying to remember their points. But that was one. They were saying that we're focused too much on the GLP-1 issue, and that's not an issue longer term. That we need to focus on the brand itself, of like developing trust with their. Again, let me. I'm making it sound like I'm like long. I'm not long this. I have no plan to go long this. I don't like the company, but I'm going to try my best to.
So does the branding of hymns allow them to sell generic drugs at a premium? That's pretty much it, right? Like, that's the question.
If they can develop a trust with the customer, and the customer can trust them, that, you're not going to leak out my data or stuff like that. You're going to keep it private. Maybe there's value to that.
Mm-hmm.
I read a report, I think it was by Paul Cerro. He's on Twitter. And
his opinion is not valid. He's bearish.
No, he was a bull that sold.
Doesn't matter. He's paper-handed. Bear.
Wet paper.
But he thought the whole GLP-1 thing was a big issue. And he
he's
was
a coward.
Super bullish. So
okay.
I think if you're a bull or I think he also did a podcast recently.
Yeah.
Go listen to him, and just take his opinion for what it's worth. Which I don't know his track record. I don't know a lot about him, but I was listening to it, and I thought, okay, like it made sense what he said.
It's like him sold like Viagra pills, right? And then someone else has better marketing and does Blue Chews after. So like,
well, what if like
I just don't see what's so defensible about this. We're just gonna have an advertising battle over drugs.
Mm-hmm.
I mean, we already do, to be fair.
Yeah.
Well, these are going to be like
they don't have the ammo as the other guys, though.
Mm-hmm.
Yeah, and also, I mean, no one's been paying attention to this, but like the news. So the GLP-1 news was bad because Eli Lilly come out and say we're going to be focusing on ramping up supply because we know there's a shortage. And then additionally, I don't know if this was talked about, but some of the other pharmaceuticals are developing DTC businesses.
Mm-hmm.
Like they just want to go direct to you and give you a cheaper price for the drug.
So this is my question about HIMSS too. If Amazon wanted to, couldn't they just kill this company?
If they package it under Prime, maybe not.
No,
or to the general public, you mean more?
Yeah, because like even within a household, you can have multiple users under the same Prime account as long as it's under the same household, and they can all the packages can be 4 different names. So if there's a privacy element to it that you're trying to keep, and that's the concern. So, but Amazon already has Amazon Pharmacy, absolutely. But again, like when I'm kind of devil's advocate here, HIMSS is about the privacy, component.
Yeah. Rest in peace, Walgreens.
Well, I guess it's about the privacy component, but like, see, this is my problem. Is like I would imagine, and see, I probably have to be more creative. You're a married couple, you're having some issues, you talk about it and you order it. I don't know if you're really hiding anything, but maybe
you don't want your neighbor to know about it.
Why the fuck would my neighbor be looking at my packages?
You don't look at your neighbor's packages? It's completely normal, I think.
No, I look at theirs. They don't look at mine, Fabio. Okay? It's a one-way relationship.
I always go, like go up to the door and like ED pills. I fucking knew it. Walk away.
As he's like pulling out of the driveway next to it, it's like, I knew you were on ED pills. Flaccid Frank.
Frank's watching. He's like, oh.
No one loves I should have bought from HIMSS. He would have never found out if I bought from HIMSS.
He would never have known.
So I guess also like, yeah, you make a valid point. So, you're with your significant other, and are they not going to know that you take those things? Like, I didn't think about that. Any wives out there, would you not know if your husband was ordering, these kinds of stuff? Or would you definitely know, not in that sense. Like, would you definitely know because you saw the package coming in, not the other way?
So they saw
I guess
coming in.
You've seen both
what
packages.
package are we talking about? Where's it going in?
I knew I walked right into that. Oh my gosh. But let me even see. I don't even
shame.
I want to see what they even come in. Dude, I swear, does a HIMSS package come in a box that says HIMSS on it? I think it comes in a box.
I mean, that makes sense.
Oh, no. It literally just comes. I'm seeing one now. Well, it has a tape on it. I don't know if that tape says HIMSS on it. I was just trying to see how they come in. If they're inconspicuous, or you can tell that's a HIMSS box. And I'm like, that defeats the purpose. Okay, it comes in a black box unmarked. Well, now I know if I see a black box and it's unmarked, I'm like, that guy has ED.
You like check to see. It's like, is he bald? No. All right.
No, now I'll know if I don't see an Amazon box, because what's more inconspicuous than the thousands of Amazon boxes someone gets.
Exactly.
How do I know the difference? Because
So,
I just got an Amazon package. Inside of it was two packages of Monster green tea. 2 ones. I got a month's worth of Monster green teas now. You wouldn't be able to tell what's on it. All you know is that there's a sticker on it that says heavy. What could it be? I don't know. My neighbor doesn't know. It's an Amazon
you don't know
box.
that. Maybe he checked.
But good thing you told me. No, it comes in a black box, unmarked. Well, that's a signature. If I see a black box now, thank you for telling me that. If I go around the neighborhood and I see a black box in the doorway, unmarked, I know what it is now.
I just think people, I mean, in general, you shouldn't be ashamed of this stuff. Stuff happens.
No, I know, but that's like the point of the branding. They say is like it's privacy. So,
like going to your doctor, like he's gonna break HIPAA laws and not be private with you. I don't.
yeah.
I
Oh, there we go.
They're
I didn't even know
making-
this. That makes sense though.
They're making money and they're growing, so there's something out there. I
Yeah.
just don't understand it, and I don't have to invest in it. So
No, you do have to invest in it. Sorry.
Citizen, I'm getting margin called tonight and every night.
Dude, well, we can talk about that as like the brain rot break if we want. Do we want a brain rot break?
Everyone getting margin called.
Yeah, let's do it. Let's do a brain rot break.
All right.
While you guys do that, I'm gonna grab some real quick. I'll be right back.
All right. He's gonna let me just go ahead and send this to.
My brain's already fully rotted, so I don't need a break. So I'll be right back.
It's too late for you. Oh, okay. I guess hold on, I'm gonna try to send it one more time. Different selection. Okay. So I think you guys will get relative entertainment out of this. So consider this break time, brain rot time. So sorry, not sorry. And then we'll continue on with our scheduled programming. Let me see when this loads in. I found these to be quite entertaining. All right, there we go. Dan's like, I know what these are.
We're talking about this.
Why not?
I was thinking about doing a 10-minute video on like the numbers. Well, anyway, she could show it, but
Well, tell me what you feel about this.
like
Citizen of the Year, you'll love
actually
this.
break down all the costs and fees related to doing something like this, because he doesn't talk about that, like the interest from the margin, the fees from Misty, the taxes. He never talks about taxes. So, and you should be making estimated withholding, payments, something like this. And then the fact that the J guy said you need to put like half the money back in to maintain the distributions. So if you factor all that in, there's really not much left. There's not a lot of skin in the game left after that. And then,
oh, Citizen, so you're already aware. I didn't know he was already aware.
did he know?
So apparently he didn't.
Oh,
know.
he's on it, dude. He watches it for fun at work. I think he said the live streams. So.
Yeah. Okay. So for anyone who's looking at this and going like, what? And anyone joining us in, just so you know, we're on a break right now while Andrew gets back. So this is brain rot break. So your brain's going to rot a little bit, financial junk food. And then we'll get back to our scheduled programming.
Well, first of all, we say you're completely and utterly the dumbest person I've ever met to buy Misty in the first place. But then to take a loan to buy Misty, like you're layering debt on margin on leverage in the first place.
And do you see that interest rate, that implied interest rate with that $2,000 a month interest?
What do you think the payback period is on this?
Well, personal loans are usually always not very long.
You can
not
go
very
up to
much
like
more.
84 months, I think I've seen.
Yeah, they're not crazy.
So what's the implied interest on that?
So for this, well, if we take his word that it's $2,000 in interest
per month,
per month,
right?
And by the way, this is personal loans go up to 32%, I think, is like the highest someone can get. So he has bad credit. He's also revealing he has bad credit. Because you can get, I mean, he doesn't know that he's owning himself on the internet like really hard here.
Did you use SoFi? I wonder if you use SoFi.
That's what I was thinking, because SoFi's 100,000 is the max.
This is one thing that someone must find out. Someone, this is your mission. Find out if this is a SoFi loan. Because that would be funny. But this is insane. But, you know, the thing is, when you try to talk to these people, they genuinely think a 98% annualized rate of return is possible. And that's what Misty offers, supposedly, right? What they think it's going to give them. Because if you go on YieldMax's website for Misty, and let me pull it up for us so we can just look at it ourselves. So this is what you're looking at. And they say, wow, okay, so I pay 24% interest and I buy this and I get 96%. So I know like all of you guys watching are more than aware that that is not true. The reality is going to be something way less than that. If you can achieve that consistently, you are the greatest investor to have ever lived. First of all, ever. Like no one even comes close to you at that point. I think you beat even the Renaissance funds, CAGR. So like you're insane. You're a superhuman, or you know, one of the luckiest people on the planet. Either I don't know, but yeah. So distribution rate 96.26, and then this new. Yeah, thank you for mentioning the new hottest ETFs, QDTE and XDTE, the weekly paying ones that do algorithmic daily options trades, right? I hate all algorithmic option strategies because it's not every day that it's a good day to do options. It's just not. Some days are not good. Some days are good. Not every stock. Some stocks are good. Some stocks are bad. But algorithmically doing any option strategy, I think, is stupid. It's stupid. But people are going to do it. It gives you weekly income, fake income.
Is Mr. Portman running the fund? I'll invest if he is.
Dude, Mr. Portman, wow. He's doing like 1% here, 1% there, 3%, 6%. He's on a streak. He just keeps hitting it. He's going to recover all his con losses. So
the issue is it just takes one day like that B. Riley where it was down 50% and you're washed.
Yep. No, that's true. Yeah. So it's like that conversation we had the other day about even if it's a small percentage, even if his hit rate is like 99%, that one time it's not good. It's over. That one hit, it's gone. All right. So yeah, that's the brain rot. The brain rot is that I think I can also show this, and then we'll go back to our scheduled programming. Oh, didn't mean to do that. All right, whatever. I won't show it. I added like a little video. All right, so back to scheduled programming. Starbucks. Oh, I'll put this on a star SMCI.
I don't think. Well.
Oh, we had more questions, but anyways.
Well, in regards to Starbucks, the Chipotle, ex-Chipotle CEO, I mean, I think someone looked at his pay package. It was insane. Because they must be getting something insane to be doing these switching over. But he fixed Taco Bell. He fixed Chipotle. Now he's going to attempt to fix Starbucks. And so understandably, with that kind of track record, it's like, okay. And I think, I don't know if it was 50-50, the old CEO leaving and this guy coming in. that old CEO inspired zero investor confidence. Like, if you were like an investor and investing on like, oh, I think they're fine, I think this guy's going to do it, I don't know why you invested. But like with this Chipotle CEO, like I get it. That being said, near term, I don't think he fixes anything, right? He can't. He doesn't have enough time to. He has to get in, figure out what to do. You know, this stuff doesn't happen overnight. And Starbucks is having declining same-store sales, which is an issue. So I still am not interested. It's another company I like look at. I'm like, I see the path to victory. I'd rather invest in something else. I don't find it very interesting. I just don't see the attraction of the multiple. If it was super cheap, I'd be like, okay, maybe we're talking about something. It's not that cheap. So why would I pay up for a company that's struggling? Already has so much penetration, you know, so like really it turns to making the stores better. And how do I make the store? Like there's a lot of questions at this point. Now the CEO is a rock star, so I get why people buy and saying, hey, the CEO could just turn it around. I think that's a tough sell for me though. So yeah.
Absolutely. Like Dan's comment on this the other day. If he can't fix it, it's fucked. If this guy
That's one of the worries, dude. Like if he can't fix it, like there's no runner up to best CEO in fast food. Like this is it. But
you know who that guy needs to go be in charge of, and I think he could just do wonders because it's already a good company with that kind of CEO.
Oh, I like this game.
But after listening to the Acquired episode with the Starbucks guy when I was fixing my destroyed bathroom, but so like you can understand like why there's stores everywhere, right? Schultz explained that the calculation of putting a Starbucks in wasn't about like territory. It was about the estimated. They had like a formula for like the repayment of the cost of opening it. That was their justification. So they didn't care. They could put 4 on the same street. That was how they value, or that's how they calculated if they should. Like that's got to end. That was when you're in hyper growth mode. They're not there anymore. And then China, like I think they need to spin off their China. They got to do something with the Chinese business to insulate the rest of Starbucks from it. I think in their decision making. So like have separate decision making in the Chinese business. I don't think it's working the way they want it to. It seems like a lot of effort for that. And then like you said, improving margins and same store sales has to be like that should be on his board, like number one.
Which is tough because basically like the obvious lever is like price raises, and it's like how much more price can you raise? But and I think there's like Carlson, I think may have nailed it. In the past like 6 or 7 months, there's been 2 Dutch Brothers built in my area, a Scooters, a boba tea, and then a regular tea place. And I think like that's another issue. There's a lot of I don't think it's caffeine in particular. It's like water, like liquid market share fighting for. But to your question, Fabio, what's the guy's name?
Who?
The CEO.
I'm bad with names.
Okay. But where he should go or what he would fix? I'm assuming you're thinking a restaurant stock, so maybe Yum?
No.
I was going to say because he has familiarity with some of their products already.
No, but he could. Brian Nicole. What's his name? McDonald's.
Yeah, but McDonald's isn't really broken.
No, it's not broken, but he could turn into a monster again.
I feel like this guy likes going into a sinking ship and turning it around and saving it. I don't think he'd go to McDonald's.
Yeah, because the other ones, I don't know. It's like McDonald's has boundless potential. He could actually get them into doing a new restaurant concept. You know the astonishing thing. People forget this. You know Chipotle came from McDonald's, right?
What?
Yeah, Chipotle was spun off from McDonald's.
No way.
Yes way.
Oh my gosh.
Yeah.
I had no idea. So
Dude, okay. So what I'm telling you is like McDonald's, and Dan, I'm just preaching to the choir over here. McDonald's has the ingredients of a legacy company. Like they are a spawner. People don't understand this. Like things have come out of them. You bought McDonald's way back when. You have more than just McDonald's shares today. First you've done very well, but you have way more than just McDonald's shares. They have the historical know-how, the culture to try new things, try new concepts, and they have the war chest to do so. So like we'll see what happens with Cosmix, but Cosmix seems like that's something they're gonna keep if it works out because it's in the McDonald's universe. But yeah, Chipotle wasn't made by them. I think they just acquired it. They also had another coffee shop. That one they sold. They didn't spin it off. It was Pratt, something like that. Yeah, no, Ben's right. Like what I just said, they didn't create Chipotle, but they were invested in Chipotle.
Yeah, and Lincoln's like, you were there in Discord. Like, I don't think you realize how often I'm like sitting in there AFK. It's a lot, but I didn't know that. So are they invested in any like? Do they still do that? Or do they still do investments in smaller, startup-y, quick service restaurants?
No. Oh, sorry. My correction. Yeah, McDonald's divested, not spun off. Divested from Chipotle.
Okay.
But they've done it before. Like the one Pratt was another company. Pratt. It's another coffee shop. It's not very big.
Pete's?
No, it's not Pete's.
Okay.
Pete's has Coca-Cola investment, I think.
Oh, I didn't know.
Or is it Pete's or is it the other? No, I think it's another one. Coca-Cola bought another coffee store. Let me find out. Coca-Cola bought.
It doesn't matter, but like that's interesting with McDonald's.
And they spun off Boston Market was the other one, I think.
Really?
Yeah.
I did not know McDonald's these kind of. Dude, Ronald ain't no clown, is what you're saying.
Bring Ronald back. Come on.
Wait, what?
They retired him too early.
They retired Ronald?
Yeah, all the characters. They don't use them anymore.
What?
I don't know. But in the age of YouTube, why not? You got to bring Grimace back and the Hamburglar.
See,
so much potential.
I guess I'll learn more of this when my kids come along. Do
you have like the McDonald's with the play sets in them?
I don't even know.
No? Okay.
I don't know. I just haven't been to one in forever. Fake is Andrew knows nothing about McDonald's. That is very true. Even though I'm a new employee there, after getting a very large loss on my investment account.
Sir, this is a Wendy's.
Sir, this is a Wendy's.
All right.
So moving on from that.
Disney.
Yeah. I don't like it again. I'm happy with the first time I bought it and sold it.
I have put sold. That's it.
It's just not the same setup as last fall was just like it was a turnaround.
And then the guy lost.
You can't say it's a turnaround. I don't know. It's not the same as the setup last fall.
Everyone talks about their assets. They have the parks. They have the cruise lines. They have the IP. The issue is there's a lot of CapEx. Their IP's taken a massive hit. And it goes back to me looking at it and saying, like, look at how much work needs to go into these parks. Look at, I mean, cruise lines they're going to put money into the ships, I'm sure. Although they did a really good job buying ships during COVID.
Yep.
Their IP, especially, you look at like the Star Wars they bought, Marvel's kind of, they're scraping the bottom of the barrel with that one. They're going to have to find new IPs for their shows. ESPN's fallen off. So I just don't find it interesting.
Yeah, because you had the announcement of the CapEx last fall, which is positive, but now you actually have the cost of the CapEx. And I saw they are full bore in Florida when I was at Disney World last month. There's renovations everywhere, but now we're going to start seeing that on their financials, those expenses.
Oh, there's going to be
they had attendance issues in July. I saw the stories on that. Attendance was down.
Although I'll tell you right now, it was disgustingly packed, and I just went.
Well, Halloween, right? Halloween just started.
There wasn't an event that day. It was just, I don't know. It was just disgustingly packed. I couldn't get a virtual seat on the Tron ride until like 10 o'clock.
Damn.
Because I just wanted to try the Tron ride.
Was it good?
It was good. Yeah. It's kind of short, but it's very good for how long it lasted.
I mean, when I went with my wife, we went with her family a year and a half, 2 years ago. It was a lot of fun. Like we enjoyed. We actually went during Halloween, and that was a lot of fun. Like they had my nephew. We went for his birthday, and they went to what's the event? I don't know the guys, but some Halloween event he went to. That looks pretty cool. Like the cool thing about Disney is they go all out with their stuff. Like the details very good and all that. It's cool. I just look at that and I think I don't really want to invest in this. It's a lot of maintenance. It's a lot of capex. I'm not saying it's a bad business, obviously. I'm just saying there's better businesses out there that I'd rather buy.
But like I'm not willing to overlook this. I'd have to see the succession plan this time. I overlooked it in the fall. I was okay, but
I agree with Ben, by the way. The food was trash. The food was
Disneyland. I can't speak. Disney World has pretty good food.
No, Disneyland, garbage.
They don't have like the high-end restaurants because they have like options. You can go to like normal restaurants, fast casual restaurants, and then you have higher end restaurants.
We went to the Beauty and the Beast castle. That was not worth it. It was not.
Well,
dude, so much money. I'm like crying there. Hundreds of dollars for like C plus food, basically.
Yeah, that's anything that's like character themed.
Yeah,
I'm gonna tell you,
so
don't do it.
Yeah.
They saw the have you been there? You know how the drinks with the little ice cube lights?
Yeah.
So my daughters saw that. They're like, I want those. I opened the menu. They're like $20 each.
Did they get them?
Yeah.
Yeah, you're a good dad.
God damn. I'm like,
he's over here complaining. He's like, of course. My
I'm like,
daughters could only have the best, but
I have a bridge too far. It's not something.
Hey, bridge. That's the second time, but you didn't do it intentionally.
Or did I?
Or did you?
Or did he?
Because at the
what do you think I was looking at before I came on?
Bridges. We build bridges, not walls.
Yeah. I don't know. I don't think the upside's as good as it was last fall, which means I bought it at 81 last fall. I'd want it lower than that. Because I don't think the 120 valuation still I don't think it's there. But
yeah.
Although, think about the cruise or CEO picked the Star Wars woman gets fired.
2025, Q2 2025. She's gone.
They split the cruise line numbers out on their financials. Like all these things, like you get pop, like right, but
dude, Kathleen Kennedy is gone. Q2 of 2025.
Can I give this is my honest opinion on Disney? Is I think it's like a lazy idea. I feel like if you're investing in Disney, it's because you don't actually are looking at like other stocks in the market and you're like, Disney because it's a well-known name.
Yeah.
Like,
because Do you really think Disney Plus numbers are going to surprise anyone? Have they ever really surprised on a
Okay,
quarter?
no, I'm gonna
And
be
the
devil's
legacy
advocate
business
here.
is going down.
This cannot stand. I'm gonna be devil's advocate here. All right, so
Let's hear it.
Wouldn't you be
they had
Angels
some-
advocate if you're advocating for them?
Yes. All right, Angels advocate here.
Okay.
They had some pretty good box office wins recently. All right, we have Inside Out 2 and Wolverine, Deadpool Wolverine. Come on, don't deny. So the Disney Plus numbers, the reason why they don't look very impressive is they're lapping tough comps. India, remember India? They didn't want to pay that crazy amount for cricket, so they lost a lot of subs. That's akin to the Netflix issue with Russia. They basically just decided to nuke something, and so it's going to be a little bit before the numbers start to really show. So that's masking the growth that they're getting in the traditional streamers. Yes, they burn a lot of money in trash shows. You know, I tweeted about it. 160 million for Star Wars Acolyte. That is unacceptable. There should have been heads rolled from that, like fired, all benefits stripped, like terrible breach of contract lawsuits because it's borderline sabotage how bad it was. So yeah, I think that the parks business, the CapEx, I think it's going to be worth it because what they're doing in the parks. Disneyland's the shitty Disney. Who cares about that? Disney World is where it's at. Disney World's the moneymaker. Disneyland's the California one with the unions and the blah, blah, blah. Disney World has, sunshine, rainbows, lots of humidity, and crazy Florida drivers. So it's like, it's good.
Well,
but wait. Here's what this got coming on. All right. So they have Indiana Jones section in Animal Kingdom, right? Indiana Jones coming. I forgot when. I don't know the numbers on when. Zootopia. That's going to be huge. What?
CapEx?
Why you say CapEx?
That's what I'm saying. It's a high CapEx business.
You got to live through like the facilities being built over the next like 2 years.
Right. And I'll do that living in something else.
Yeah, but so like the free cash flow going forward, it's going to be not where it was in like 2018, but you're not paying that.
Yeah.
So you're paying for that assumption already built in.
Maybe this is the bell curve meme. Maybe it's like you have the idiot who's like, this big Disney. And he's just like looking at like, oh man, like they're big. And then you have like the me in the middle. It's like, no, this company, like it's high CapEx. It is have to do a lot of reinvestment, low ROI. Their IP said, then there's like then there's the monk. He's like, just
there's an insane moat. What are you talking about?
No, Andrew.
Oh.
He hasn't said moat once.
No, like it. Zootopia place, Monsters Inc. All right, Monsters Inc. Like a whole section of Hollywood studios is being carved out just for Monsters Inc. There was another big one. There was one more
like real monsters come out and scare you. That'd be awesome.
No, but like there's people that are just really hyped. They're milking a little bit of the Pixar stuff because in Hollywood studios they have Toy Story Land. Like kids rave over there. It's like foaming at the mouth. It's insane.
No, I mean, I am not saying that they don't have a lot of really cool assets and everything. I'm just looking at like this compared to. Okay, what's the market cap of Disney?
180 billion. I'm guessing.
160 billion. I'm just gonna look where it's at in the S&P 500 and just look at companies close to it and see what I'd rather hold.
I was gonna pull this one card out of nowhere, out of left field. You fell for my trap card. That's a reference.
Wait, what?
The what?
I'm confused.
No, that's a super nerdy reference. Don't even bother. Like it's embarrassingly nerdy.
I didn't know until after I went home that Disney Springs was was it Pleasure Island or Adult Island?
That
forgot what they call it.
sounds weird.
Yeah. There was like an adult section of Disney that didn't work out. But
Okay, I'm just going to ask you a question.
Yes.
Walt Disney or Caterpillar?
That's not fair. That's not fair.
They're right next to each other market cap. They have the same weighting as S&P 500.
how could you not say
No, I know.
bulldozers?
Bulldozers are cool.
Okay.
Wait.
We're about to have interest
Question.
rates down. Construction might pick up
What?
more.
Yeah. I say Caterpillar.
Yeah.
Andrew's like, yeah. My point proven. Yeah, I know. Okay, fine.
Disney or S&P Global?
Are they the same market cap?
Yeah.
S&P
Actually,
Global's
I mean, they're the same. I'm just going off of weighting in the S&P 500, which is by market. Yeah, S&P Global is 158 billion.
fucking hell.
So it's actually smaller than Disney.
Yeah. I mean, if I had to own all of one of them. No. I'd actually choose Disney in that case. I could make some changes there. Heads would roll.
Well, it's different if you get managerial.
Yeah. If I get all
access,
of it, heads
obviously.
would roll. Immediately,
Yeah.
we're gonna make, a Vader TV show. We're gonna bring back Star Wars.
Dude,
here's an
A
interesting
rated
one.
R Sith
Vader
movie.
TV show.
Oh my god.
Oh, rated R Sith movie. Hell yeah. No, I'd
Yeah.
well, anyway, we're getting all right. I see your point. All right.
But I got one that's actually interesting. I'm
Okay.
curious. Walt Disney or Goldman Sachs?
Walt Disney.
Yeah, okay. Because they're the same market cap.
Walt Disney.
You'd have to have the right setup for Goldman Sachs more, I think.
Yeah, Walt Disney.
I think so.
All day, every day.
ServiceNow is also the same market cap as this one's, but and Intuitive Surgical.
Service. Damn. Okay, those are both. They're expensive on the surface, but now is a really good business.
Right. That's just kind of my point when I look at, because I always think when people look at these companies, they look at like, oh, the valuation. Look at what you're paying for a company. Like, companies the same size as Disney. Like, I'm not saying it's a bad company. It's already just really big, market cap wise. And what I'm paying for that, because what you're paying as a shareholder, you're not paying $160. You're paying for a share of the company at that valuation, at that market cap.
Well, no, but here's my pushback to that. Netflix has proven this is the problem. But the thing is, will there be another Netflix? I think it's possible. But Netflix has proven that model gets really freaking big.
The
Very
streaming model?
profitable. Yes, very profitable.
It's proven that Netflix
can
get
do it.
very big. I don't know how much room there is for a second. And like Disney, I don't want to say they're niche because they have such a big catalog. But compared to Netflix, it feels like they're almost niche.
It's just that they genuinely have bad shows. They genuinely have bad content for adults. It's genuinely terrible. Shogun was very well liked. I know you didn't like Shogun, but Shogun was very well liked. So if they have more of stuff like that, then we're in business, because you have to count Hulu. They're gonna settle. This is what I think, though. You have a lot of catalysts set up for Disney this year. Like a lot of them. And so I think there was a question brought up, Disney versus SPY. I know that club members, you guys did bets with each other. I'm going to chime in here. I think that Disney has a high probability in the short term of outperforming SPY. But I actually, to Andrew's point, I find it difficult to see a little bit beyond that because of its already size. Like a lot of things have to go right. But in the near term, we have quite a few catalysts. We have the lapping of bad comps from India, right? And that the market might start to see beyond that. So then that's something that might change the perception, and you might see growth in DTC. The CapEx will not be done, will be kind of in full swing. We'll get more color on the guidance there. Kathleen Kennedy will be gone. And by the end of this year, we should have maybe of a hint of what the succession plan is by the end of this year. So those are just a few ducks lined up in a row as far as catalysts go. Those are all good news that could come out. Opportunities. And so, I mean, you could see, because Disney, I'm not saying Disney will be the same size as Netflix or has the,
Nothing. Just keep going.
I'm not saying Disney will be like, surpassing Netflix or anything like that. But, they have additional ancillary business. I'm talking about Disney's DTC business, because that would be the direct comparison to Netflix.
Yeah.
But they have additional businesses on top of that are really, really, really good. Like Disney Cruises, how booked are they?
I'm not disagreeing with you on any of that. Like, Disney is it is a pillar of entertainment. As an investment, though, it's different from saying I love the Disney product in the pillar of entertainment that it is, and I'm looking at it as an investment. And to make that entertainment pillar, you have to put up a lot of money. It's harder to do that than with ServiceNow. You build out a recurring revenue model, and it's pretty asset light. That's just been my point.
Yeah,
I'm not long ServiceNow for what it's worth, but this goes back to, I don't hate it. I'm just not going to go long. I'm not a maniac.
I'm going long Disney by selling puts.
Yeah, fair
enough. Look at this guy.
Who?
Curb Stomper.
Oh,
that's Curb Stomper, by the way, if you didn't know.
But hey.
Did you sell your dog already?
My stock that you're in was up today. Wait, how much was it down?
Is he talking about the other one? But I think it's only down like 0.2%.
It's only down 0.49%. It's outperforming the market.
Oh yeah, 0.49. Yeah, it's outperforming the market. What are you talking about? Monster.
Monster is down.
Oh, well, I guess that's a good segue to talk about Monster.
Yeah, he's building a nice bridge for us to walk over and talk about Monster.
All right, Monster stock.
Yeah, so I was wrong, and so I sold it.
Cool. Moving on. No, I'm kidding.
No. So one of the things that was the thought I had was that their revenue growth was more defensible than it's appearing to be. I did not anticipate them basically having flat to negative revenue because they had an extra 2 selling days in Q2 this year versus last year, and their revenues were up like 2%, and sequentially they weren't up at all. And they said revenues, I think in July, were flat with 2 extra selling days this year versus last year. And my thesis was they'll be able to, we have a consumer slowdown. They're still going to be able to grow at a 6-7%. They'll take a bit of a hit, but it's not going to be much. And I was like, oh, they're not priced for that. I was wrong, and I sold.
Yeah.
And I think it's a bigger thing to. I see this a lot on like YouTube. I think it's a common retail trap that you get into. You go, no, like I had this stock. I talked about this stock. I want to be right, so I'm going to say buy more because it sold off. And I'm like, no, my thesis broke. I'm out.
I'm a long-term investor.
Yeah, that's the thing. It's. I think I told you this. It's not cope to say you're a long-term investor. I think a lot of YouTubers or people, they use that as a cope because they don't understand their own thesis very well. Because like when I am a long-term investor, as long as my thesis is intact, the second it's broken, I'm out. Because like I invest for this reason. The reason is gone. Why am I invested? And so, it wasn't even that bad of a hit. I think I was actually, I was technically up that next day, but.
But do you have theses that are like macro situations, or is it more directly related to like the company's decision making?
Well, this one in particular was partially about what the product is. So my thought was energy drinks, especially the ones that Monster has, they're marketed towards men more. Men are more loyal to their habits of what they do. You got the construction workers, they come in, they grab their Monster, they go to work. And if we have a consumer pullback, which is what I was seeing, is the consumer is pulling back and struggling, we are going to have a sell-off or like a slowdown in the consumer buying certain things. And we have seen that a lot. I mean, look at Capri Holdings. Their earnings have been terrible. I was just looking through them the other night to see if the ARB was worth it. I thought it wasn't. What are other ones that we've seen? The travel industry, they're down. And I thought, well, this isn't an issue for Monster. They're going to continue to grow at a solid at least 6 or 7% because of the products and because of what they're doing. Well, they came out and basically said they had negative sales growth year over year. And the company's too expensive for that. And that was like, I did not anticipate that happening. And in my opinion, this company still is too expensive at today's price if that trend continues. So I guess it was kind of macro, kind of individual stock related. Like my modeling was like, I put in, I think it was like 6.5 to 7% because I was modeling a consumer downturn.
Don't they seem pretty? They're still optimistic about next year, aren't they?
They don't give guidance. I mean, they always sound kind of happy on the calls. Like they're not like worried, but I don't think they sounded happy and optimistic on the last call too. So I don't hate Monster. This is going back. I don't hate it, but like after this, my personal thesis broke and I'm like, okay, I'm going to get out. I have other places to put my money that I really like the thesis and it hasn't broken. Like some people were like, well, it's just a slowdown in growth. I'm like, you went like, I don't think people realize too the velocity that the slowdown was. So I can pull this up here. So they went from, and I'll share my screen just to pull up so we can see this. So they reported the fourth quarter results. Oops, that's not that report. So in the fourth quarter, look at this. This is like, to me, Q1, I was like a little worried, but I was like, it's going to be fine. I don't think the thesis is broken. So here's Q4. And look at this. Record fourth net sales rise 14.4% to 1.73 billion. So they had 14.5% year-over-year growth with bottom line, with margins expanding. So I think you had net income increased 21.6%. Like, awesome. My thesis is going fine. This is exactly what I thought. It's probably going to slow down. You go to Q1. What?
That's what Dan said.
So you go to Q1 and it slows down. It slows down a little bit to 12%. And I think the net income was like a little bit, but the management said, yeah, we're working on some bottom line items. We're trying to clean that up. Okay, fine. Once again, I'm okay with it. But you're seeing a trend, a slowdown trend. And then you go to Q2 and you get, oh, that's the wrong one. Then you go to Q2, it goes from 14.4 to 11.8 to 2.5%. This is an incredibly fast slowdown. And what did their net income even go up? I'm trying to remember. No, I think their net income went down because their operating expenses went up to 492.3 million versus, so I think net income went down. Nope, I lied. It increased 2.8%. So they did have some improvement. So gross margins improved. But like this company is too expensive right now for the decline that I'm seeing, and it's not picking up. But from what I like, channel checks that I've been looking at are not showing it improving. For Monster or Celsius. I think I was just showing people channel checks on Celsius today, right? And market share is going down. The year-over-year sales growth rate's not very good for Celsius. I didn't check Monster specifically, but I saw Monster channel check like a couple days ago, and it was not good either. So that's my thing with Monster. It's like I look at this and say, my thought was they're going to be able to keep their revenue growing at a decent rate. And remember, like I said, this had I want to say an extra 2 selling days versus last year. And so that 2.5% was really just due to extra days, potentially. So that's why, like, to me, that was a change in what I'm thinking the company's doing, where it's going. And there's been some other like small things that I kind of looked at and said, I don't know about. The repurchase and the fact that no one participated, or that it got so oversubscribed, told me that like people were looking to get out, including the CEO selling and the co-CEO, like them selling, getting out. I didn't like think too much of it, but like you start to add up all these little things, you're seeing the slowdown, CEO retiring, and doing a buyback to get himself out. I just, it's not a bad company. Their flavors are goated. We've talked about this, but I don't know. I have better places to put the money.
Fair. It's cool to
Now
talk
that I'm
about.
done. Now that I'm done yapping, do you guys have any thoughts?
It seemed like a good idea at the time. That's the famous words. It seemed like a good idea. Well, there's one that seemed like a better idea at the time that we'll talk about, I guess. But Andrew's like, I'm not excited about that one. Yeah,
It hurts.
I think it was higher priced consumer staple business. So when the narrative has a little bit of a, rough patch, hey, adjust, adapt, change,
Overcome.
maneuver, be like water, become the cup. And then, yeah.
I still would like to swap my Pepsi for it, but I don't feel like I have to hurry. I don't feel any rush to do it.
Swap your Pepsi. That's a big.
I
Well,
think
Pepsi's at a 25 multiple, right?
I think you have this next quarter. You're going to see a reacceleration, and it's probably going to go back up. Or if you see a decel like I've been seeing on channel checks, this thing's going to probably drop another 5, 6, 7, 8%. That could be a really interesting time to get in, depending on where you think they go from there.
Yeah.
But
I think I've gone as far as I can with Pepsi. So
Frito-Lay. I used my first job out of college. I worked across the street from a Frito-Lay chip plant, and I cannot stand the smell of those damn chips. Like, it would just smack you in the face. Like, you walk outside and be like, oh, like, just like grease. You can smell it.
Yep.
And I didn't ever like them to begin with, and now I'm just like, I smell them like. Oh.
The snacks food business for a while was like their growing part, but I think that's even matured out. There's not much left. There's not much gas left in the tank, honestly.
Yeah.
But okay, so we keep getting, before we get into the big loss ever, or should we leave that for the very end?
No, because then we can just like kind of talk shit and do whatever.
All right, so don't worry, Boba the dog. I got your comment on Amazon. I got all your comments. I starred whoever asked questions and stuff. We'll get there. So the fun part, the one that we hinted at from the beginning, that we said, oh, we're gonna jangle it in front of them and then talk about it later.
Yeah.
All right, who wants to begin? Dan, not you because you didn't lose, but
I think I should, because this was all my thesis, and you all just copy traded me. You all just copy traded me,
yes.
and that's all it was. So Are we going to give the ticker? I don't know if I want to give the ticker.
No, don't give the ticker. That would be irresponsible
Okay, good.
publicly.
There is a stock, as you know, I short stocks. A stock I shorted.
Don't even give the price, by the way, of the stock. Just in advance. Don't give
nope.
the price because it can be found. Market cap, no. Don't give that away.
But what happened was they announced, basically, one of the things is, and you have to realize this, with shorting, you have to be nimble and you have to hedge. And luckily, I did both of those things. So this wasn't actually that bad for me. I think it was a lot worse for some other people. Maybe one person here and then some other people that I know. But one of the things I do whenever I short is I hedge it with calls. And I think like people saw why I do that, because people always like, man, you always have like calls when you short. And I was like, well, yeah, you have to have some way to hedge it. I mean, if you don't have tons of cash and margin, you want to be able to hedge it somehow. So anyways, company was going just as we thought it would. Everything's going according to plan. Out of nowhere, there's a press release, that we didn't see. It's nothing the company signaled. It's nothing the company told you was possibly coming. And I don't think it changes much for the company long term. It might. There's a chance it does, but I don't think it does, but we'll see. There's a chance that it actually does substantially, like materially change something. On that news, do I give the percent?
Yeah. I'll give the dollar figure.
No. The percent that it went up.
Oh. Don't be exact, make it vague.
It went up a lot. Like multiples. Like it went up as much as Tanner claims he can get you in a course almost. And luckily, like, when you're investing in general, I think, but especially when you're short, you have to be it's so funny, so nimble and quick. And I think I woke up that morning. I don't know if I had reached, I was trying to get a hold of you, maybe. I can't remember, but I know I got a hold of someone else I know, and I was like, get out now. And this was pre-market after the announcement. But, it was funny because this morning there's another company that I'm short, and I wake up and it was up on an announcement pre-market. Because this happens, like these companies put out an announcement and they'll just like pop on it. And then actually the market will then actually react to what's actually going on. Like then they'll be like, oh, actually this is a nothing burger. And so I wake up.
Yeah.
What? And so,
or it's bad news. Yeah.
Yeah. So yeah, that too. In this case, I thought it was bad news. But so I wake up and the percent that it was up was almost exactly the same as the percent that other company was up. And I had a heart attack. I was like, oh no. But I was overhedged on this one. So I was actually like, I like had a moment of clarity. I was like, oh, actually, if that happens, I'm more than fine. But yeah, that one ended up being a nothing burger. But anyways, basically, I guess there's a couple things. What I did wrong was probably allocation. Not probably, it was allocation. I don't think the research was wrong. I still hold that like what I read with the public information available at the time, I think I made the correct decision. The issue is you only have so much available to you if you use public information. If you had access to everything, all the internal discussions and all that, yeah, I mean, investing would be easy. There's a reason there's like, non-public information. Because of that, especially when you're short, you have to watch your allocation sizing as well as trying to be hedged. I was hedged. I still think the allocation was too large. I think that was the issue ultimately. By the way, we're like talking like it's a postmortem. I mean, I went from being up like 65 to 70% year to date. Now I'm only up in the 40s, like mid 40s. So it's not like I like got crushed and I'm in the poorhouse. Fabio is going to like, his year to date returns are still like almost 80% or something ridiculous.
76%.
Dude, shut up.
Well, I wanted to be more impactful by telling the dollar figure I lost, so we can.
Okay.
But
Okay. You go ahead and tell the dollar figure you lost. My dollar figure is not.
I'll say from the holding co, the one that we update a lot, which actually, in my personal holdings, I didn't even have that much of an allocation. So this is the more impressive one in terms of loss. And so hold on, let me go and actually get the total exact dollar figure lost. Realized gain and loss. There it is. All right. $106,746.02.
How much again?
I'll read it again. Sorry. I just tabbed out. $106,746.02.
And now you're only up 76% year to date.
Yes.
You poor child.
It was a tough day. But that is actually marks the record.
Sucks.
That marks the record. That's why it's not the largest loss ever. That is the largest loss dollar figure I have ever experienced.
Is it what was your largest, and maybe, I don't think this was it. What was your largest portfolio percentage loss? Or did you
like
really
as a percent of total portfolio?
Yeah.
Oh, 100% was whatever 2018. Yeah, Q4 of 2018. Because that was a period. It was not like 2022. I did not play it as gracefully. So the whole market went down, and if you were leveraged beta, you had maybe a little bit more of a dip. So
yeah. So my largest, it was my largest like probably percent drop in one day. I don't think it was, no, I probably made some, it was probably me doing some dumbass shit on a Chinese company back in 2021. I got caught in the Chinese company, and then I was like, never again. And that's when I learned Chinese don't care about you. Chinese companies, not the people. But
Rob H, it's a figure of speech. It wasn't leveraged beta. It's just like when you're in names that have a bit more beta to them, then yeah.
Mm-hmm. Leveraged beta is like you could say something like a PE firm.
Yeah, I'm not like leverage on the S&P. No, it's just I had stocks with a bit higher beta, but 2018 looks like a blip, and frankly, if you just held through, it's fine. So people were panicking for no reason, and it was what it is. But yeah, so the percent loss on it was, I think, like of the position approaching the 50% mark.
Damn.
For Sonder. So yeah, for Somber, like
right. So
be sad about it.
I want to. No, I think it was a Chinese company. That was my largest loss. I think it was Tiger, Up Fintech Holdings.
Tiger.
Yeah, because it was during the 2021 craze, and I thought people are getting, because at the time they looked cheap too. They weren't trading expensively, and I was like, oh, people are into investing. It's going to continue. And then the Chinese government basically came out and was like, one, you can't invest. You have to buy property. And they also prevented these guys from being able to even do a brokerage in another country, I think. And I mean, I got out at some point. I can't remember what, but
no, it's everything in 2018 was just big tech, Meta, Alphabet, everything.
So
I know if you let me actually pull up a chart. I can pull up just like the QQQ. As an example, you were in any of those names back in. Look, this is what I'm talking about. You see how it looks like a blip?
Yeah, but at the time, that was all-time highs, down 15%.
15% drop. Yeah,
it'd be cool if you could do a chart that cuts out the future, it stops at that date, so you can see how impactful that was. I don't know.
Oh yeah, there is one. So if I do, give me a second. do. Yeah, this will do the job. Hold on. Preparing the chart. Yeah, so you can kind of see 2018 was not nothing.
No, it wasn't.
So
And
this was 2022. That's why it was such a special year. Here's March, but that was 2018. Those of you who went through that, you remember.
dude, 2020 was like insane too, because that was like circuit breakers and shit. That was another one where like it was a blip that was so fast. It was almost like you couldn't take the time to like analyze stuff and figure out, okay, like what's going to happen. It just kind of dipped and came right back.
Yeah. So yeah, the overall lesson, of course, for that particular play was of course, position sizing, insurance, and mainly the insurance part, because the research I think was very good. But thankfully, like the total potential how bad it could have gotten, and a lot of the position was secured at higher prices.
Yeah.
It could have been like actually destructive. So.
For you and I, our execution was actually very good. That was one of the things that was very good for us.
Yeah.
Like how we entered and like we got out fairly quickly. The execution, like we weren't adding at the prices that could have made it even worse.
Oh yeah.
We added a certain price. Like, if we did that, I don't know how much we would have lost.
Yeah.
But
no, life is short. If you're not, no, that was the recognized loss on that single position. So it took us down to now a year-to-date performance of 76%.
Mm-hmm.
So we were godly for a moment, though. No, I'm kidding. But
I mean, I should have abandoned ship with me.
Dan, you should have forced me. No, because it wasn't like the biggest position, but it went from like 100K gain, 100 plus K gain to negative 100. Let me read the exact number.
Well, you see, like as soon as you buy when it's quiet with these shorts, and then you sell when there's chaos, kind of is what I do. And then you just get out.
No, I think it's
probably
something that you have just more experience probably than us on some of these. Because like my thought is part of the reason you execute it, and it's like sometimes it's a feel where you're like, okay, this is the return, the reward here probably isn't that great. Okay, let's get out. And I'm over here like my grubby little hands like, what more can I squeeze out? And it's like, no, you're gonna get squeezed.
Yeah, see, I'm thinking I need to survive this and get out. Like I'm running by the carcass just to grab a little piece and keep running.
Mm-hmm.
Like, you guys are like, oh, I can finish it all off, but
yeah, because
someone brought an EKG, the carcass got up and fucking hit me in the face.
I mean, like, there's nothing you could have done the wildest damn thing happened. I guess some point when it's all done, but like a company just ran us over basically, like those memes. Like,
no, I got paused. Fuad found the measure in mesquite bushes.
16,000 digits.
I'm sorry. Mesquite bushes are from where I'm from. He did it in like the local currency.
oh yeah.
And 7,786.
I mean, life is short of saying why risk it in the first place. You're always risking money when you're investing.
Hmm?
I guess I don't get the question necessarily. I'm not trying to be like mean, but like whenever, especially if you're investing, if you're a stock picker, you're always investing or like risking, your capital. You saying, what about puts? The issue sometimes with puts is one, you're still risking capital. Like if I put a bunch of money in, and I'm trying to emphasize the point, he lost $100,000 and his port's still up 76% year to date. I think you need to let that sink in for a second and understand what that means. But because what the other thing too is like, think about this. If Bill Ackman loses $100,000 in a day, he's like not even blinking an eye. Like that's NM. It's not material. And so I'll just, when you're talking about dollars, understand there's some magnitude to them.
Yeah, no, early days, this would have been devastating.
Yeah, I mean, it's and if you would have held, it would have been.
Oh, that would have been yes, that would have been devastating. If I had held stubbornly and been like, no, I'm right.
Well, and that's what I'm saying. And it's good that like we were like, because we woke up and I was like, oh shoot. And I should have been acted quicker. I actually could have gotten out with a gain. But like especially on these, you got to like be like, oh, this changes potentially what's going on. I need to be nimble. I need to know what I'm doing. And there's a way I think the way that we do shorts, I think is fairly, especially now, is like pretty responsible, I'll say.
Well, it also, in this case, it didn't make sense for me looking back, hindsight's 2020, not to purchase insurance. It was cheap. It was very cheap
Right.
at one point.
Oh,
And it was very silly of me not to. So I could have insured the entire position for like, a fraction of the capital. It was in essence like, being fully admitting to it, greed. It was essentially greed and a little bit of arrogance sprinkled in, saying, yeah, you don't need insurance.
we were coming up. It's like,
yeah,
we were coming off a hot hand.
Yeah.
And sometimes you feel yourself a little too much. Go ahead.
Oh, I was going to say, for Life is Short, just for some perspective, for the short before that, I mean, it was almost a double in terms of profit from what was lost here. So, yeah. No, and I was saying, you're saying your whole portfolio is 100K. That's why it's all about, that's why I prefer to deal within the realms of like percentages, because it's all about scale, right? It is mostly about scale. So everyone's at a different place. And I think like if you just remove the dollar figures for a moment and just think about percentages, that's really all that matters. This is a percentages game. So, and
this is actually really, we can actually talk about this. This is actually funny. We didn't so you and I can say this because I know myself, and I can say this just from dealing with you, then more than anything, what we care about when we do this is making money. Not everyone's like that. Not everyone's number one thing is making money. So for an example, if this was not about making money for us, there's a good chance we would have just held for longer and said, no, I'm not selling because I'm right. And there's someone that did that, and he lost like $5.5 million. Minimum. And his name is Paul Gabriel, because he shorted Nvidia. And instead of saying I'm wrong, instead of saying, something's going on here, I don't understand. Because you know who else shorted Nvidia? Me. But you know what? I lost like no money on it because I short a very small period of time, and my idol, I found out, was invested in it, and so I got out. That's basically the story. And that wasn't a direct short. That was by buying NVDS. But so my max loss would have been 100%. But put your ego aside, because it's only going to hurt you, and don't be greedy. And I think it's two things. And another way to put it is allocation sizing.
Yeah.
And insurance.
Yeah. And I think, like, in hindsight, it ended up being fine. It's survivability. This is a game about surviving too. Survive to fight another day. You have to make sure that you're always in the let's call it, your position to survive an adverse outcome.
I'll say this. I'll say this though, and like, I like shorting. It's fun. like I don't know why I find like going into these companies and you're starting to put pieces together and like, well, what's going on here? Finding reasons why there's something wrong going on or there's some nefarious play happening and putting that together or going through their filings and realizing like, oh shit, this is happening. I'm a very much a net long person, but it's enjoyable in the sense of I love like, and I think anyone that's in the Discord can tell you, like I just like spend time. I'm like looking at like the debt agreements and being like, oh, so like this is what's happening. Because like if you're long a good company, oh, they signed a new debt agreement. Oh, it was for 2% interest. Okay, their investment grade. Who cares? Like you don't need to go much further than that. So, anyways, this one comes down to, hey, what's their burn rate? Are they able to make their interest payments? What's going on? So it becomes interesting. So I think I enjoy it from that perspective too. But also, if you do it right, you can make a good bit of money.
Oh no, 100%. I mean, in the best cases, like there was several months, right? Like 2 months where I don't think we had a red day.
Like, think about this. I probably my account went down 20%, little less than 20% in one day. Realized loss was like 8% or 10% because it went from like a real big realized gain to realized loss, unrealized gain. Sorry. I'm still up like 40-something% year to date. So like it was a learning mistake. It was like, oops, I messed up. Although it's always easy to make a mistake when you look and you say, oh, if I had just like held, I would not have an account right now. And that makes it easier. But
yeah, it's definitely like a good. Yeah.
And I'm just gonna say, my allocation was too large, and I was just being greedy. I think that was like, yeah. I mean, and I was hedged. If I would have held my hedges, I would have made out like a bandit. By the way, but oh well.
No. So Andrew was better positioned than I. I was not hedged.
Yeah.
Like at all. I was just there. And then I just covered. So
I mean, I kind of like what else does he want us to do? Like if you're gonna buy stocks and do options and short companies, like right, you're taking on risk. We expect big rewards. Otherwise, just buy an index, right? And a lot of these YouTube channels will be like, "Oh, this stock is really cool." It's like, what are you expecting? Like 3-4% alpha to the market? Like, why do you do that? Like, I don't get some of this stuff, but
and I know Fabio's like historical time weighted returns are better than mine. I still think, and I could pull up and check, but my CAGR is like a 25% CAGR. I've only had Fidelity since 2019, and so I can't say before that I think I should be higher. So it's not like this is a 24 and a quarter is my annualized CAGR going back to 2019. So like you're gonna have some days that hurt, but if you know what you're doing, you should come out on top.
Yeah.
Fabio's is like I think 100% CAGR or something ridiculous.
No, that's not 100% CAGR.
I think you should just have I like to have a spectrum. Things you think will work out in 5 years, maybe next year. Some stuff that you think it's like this month or you're like, I don't know. It's fun. Like you I think people pretend that this isn't entertaining, right? Like part of it is. There's an entertainment value to this stuff. The risk, but that doesn't mean you overlook like the risk reward side of it too. But like looking into companies and finances is I don't know. I wouldn't say fun, enjoyable.
I find it fun.
I enjoy it. Like,
yeah, I will say this is the latest comment from Life is Short. It's definitely not for everyone. I think
no, shorting, like oh my God, no, like
no. amount of
Like,
research is like an order of magnitude more than going long. You need an
like, in
order
the
of
end,
magnitude.
if you short a company and you don't top ticket, you're going to be down, right? Because you're not at the top.
Mhm.
So that inevitably happens. Like when I did Plug Power, I was down like 30-40% within a week because I didn't top ticket, right? It went down a little, I bought it, and then it spiked up. If I wasn't confident what I was doing and had the appropriate time, like I had like year outputs, I knew I was right. I just like didn't know the timing. I had time to recover. So if you're shorting, you're not going to top ticket. So you're going to be red, right? Can you hold it? Because I've seen some people, I'm like, you shouldn't do this stuff because they just sold
What are you
immediately. I'm like,
doing?
you could just not look at your brokerage account. But they're like, oh my God, like every percentage it's red.
So, and I wouldn't encourage most people to go primarily like majority or fully short. Just for reference, I'm just checking. I am 3.6, 2.5. I'm like 6% short.
What am I? I'm like, I think I'm 3%.
Yeah. So we talk about it a lot. And I think we did have some larger allocations before. But at the end of the day, the longs are it's going to drive the alpha for us. I mean, this will drive alpha too if it works, right? And it's like a steroid a little bit. But especially as a retail investor, like, dude, there's some stocks that like I bought recently long that are I'm super excited about. Like
Yeah.
I'm not going to say it. I'm trying to think how to describe it without saying it. But
That's a bridge too far.
No, not that one. But I was thinking of the one that's across the pond.
Ah, yeah.
That one I'm really excited about. The ad tech one's pretty. Oh, and yeah. So there's like 3 or 4 stocks that like long that I've done a lot of research on, and I'm super excited about. So it's not
Oh
just
yeah,
like one thing.
I'm really excited for like this next year. I mean,
Mhm.
we're probably gonna end 2024 on like a strong note with some of these longs.
Mhm.
I've been getting questions by Boba the dog on like big tech. I don't know if you're still in here, Boba the dog. We'll answer your question on Amazon. I mean, I'll say it this way: like within the holding co, which is what I update for members, I show dollar figures and everything, brokerage. Big tech is not my largest holdings. I think by now a decent size. Well,
I still
Meta's
think
there,
Amazon's
but
a really, really good opportunity there.
no, and I was gonna say I have orders to buy more Amazon. So, for example, I basically got I basically borrowing from my future whatchamacallit contributions by selling a put that's not it's a price that I think I'm gonna get the
Mhm.
strike at, but I'd buy more shares anyway. I've been buying more shares. I took the premium and bought more shares. I've been buying more Amazon with it. So it's like I made a forward commitment to buying Amazon at a price that I think it might get exercised, but that's like the point.
Mhm.
And then if it doesn't get exercised, I'm still buying more commons anyway.
Big
So I'm trying to
boring is
build
your top
Amazon more.
sector.
Sorry?
Dex said big boring is your top sector.
He knows. Dex knows.
Yeah.
Big boring is your top sector. Yeah. Well, I'm really excited for a lot of these long names. I mean, I think for interest rates, really well positioned. And also going to be tax efficient while doing it, which kind of benefits me because I have to worry about that. Yeah.
I could tell for shorts, I could say one stock I'm short that I near term top tick that I don't think.
Go for it.
I'll put in the private chat. I think it's large enough that it's fine.
Oh yeah. By the way, that's why we refrain from saying a lot of these. We just don't want to have any bad taste. Yeah,
No,
go ahead.
I don't say it because I want you all to pay me because I'm a greedy motherfucker. And
Okay, gotcha. Who wants to compensate for the research?
No, but I'm short Open Door. And so
That's a great, wonderful American business, technology business.
it is. It is a great business. I'm an evil person. They're very nice to CNBC guests too, or hosts too. I don't know if you saw that. Oh, you never seen that video?
No.
Hold on.
Was it the founder?
Yeah, I don't think he's there
Founder
anymore though. He's not there
No.
anymore.
I don't remember this.
Oh, hold on.
We'll play it live for everyone if you want me to. If you send me
Hold
the
on.
link.
I'm just trying to see if it's which one. I'm trying to find the.
But Open Door, yeah, that's a shit co.
Are you sure CNBC didn't delete it?
I'm trying to. I don't know why the girl did like a really good job. I thought.
Open Door's like, please delete it. Makes us look bad, please. Is it not coming up on YouTube?
Yeah, it's not for me. No.
All right, just describe the event.
Oh, wait, did I find it here? Yeah. So basically, what was it exactly that happened? But like the girl was being really respectful. I can't remember the question she was asking the founder.
Was it Becky Quick?
No. Oh, what's her name?
The other one that's like skinny Becky Quick. Well, not that Becky's not skinny, but like she's like even thinner. Still blonde. Another blonde lady.
No, she's not blonde. Doesn't matter. I can't remember the exact details. I just remember like basically yelling at the woman.
Really?
And yeah, I'll find it eventually and send it to you. But anyways, I'm gonna give you the quick pitch, but there's a lot more to it. But iBuying is a stupid business model. This company should not be. I think when I was looking to short, it was like 1.8 billion in valuation. They have tons of debt. They have a building inventory, and they have declining revenues. And anyone can tell you if you have revenues declining and inventories building, and these guys are almost like a retailer in a way. I'd say that's bad. You're gonna have a bad time. Basically, they have to finance all the houses, so it's a difficult thing to fire sale them, but they're not moving their inventory. And they're going into the slow part of the year. So good luck. But their business model is terrible. And they have some cash, but the rate that they're burning, they'll slow down the burn and not go to zero. But my thesis, they don't have to go to zero. They just have to go down to $1 billion valuation, right? Which is still, I think, overpriced for this company. But that's the very quick pitch. But Fabio's excited for longs. I cut him off. I originally cut you off when I said open. You trying to find the video?
Yeah, I was trying to see if I could get my luck. I did not find it. Is it the Woo guy?
No, his name is Keith Rabio. I bet you if I just Google it instead of YouTubing it.
That's what I tried. Keith Fair.
Oh, I found it here, I think.
Oh, you did?
Let me see.
I'd love to see this.
Oh, this is it. Because she said Open Door's not profitable. And he was like, "You're an idiot." And she said it's not profitable. He goes, "No, you're counting SBC. That doesn't count." So here, I'll share it real quick.
All right. Go for it.
And I gotta share the audio. I think I'm giving away. Okay. So it's a long clip, but
buys Shopify businesses from entrepreneurs reaching a $970 million valuation with a new funding round. On the other hand, though, Open Door, which Raboy also co-founded, is reportedly suffering increased losses in its home flipping business, reminiscent of Zillow's problems last year. Let's bring in Keith for a closer look. Keith, thanks so much for being with us today. I know that there are major differences in the business models and the capital of these two companies. But I want to respond to something that you said on Twitter. You attributed Opendoor's recent pain to, quote, quick dislocation of prices, which is obviously temporary. What data are you looking at that tells you that this weakness in housing is obviously temporary?
Well, the Federal Reserve has been playing around with interest rates, right? Raising interest rates, pretty dramatically, and that has dramatic effects on the pricing of real estate. I mean, residential real estate, what people can afford, mortgages, refinancing, home shopping. We saw this in 2008. People didn't stop buying and selling houses in the global financial crisis, but it went from 5.5 million transactions a year to 4. So as you have within a quarter, within 6 months, rapid changes in interest rates, you're going to see rapid changes in residential real estate pricing. Opendoor is going to handle this perfectly. There'll be a blip for a quarter or so, but Opendoor has been making money successfully for 5 years in a row on a housing purchase basis. We do not flip homes. We charge a fee. So, some of the criticism of the public markets has been predicated on a defamatory story run by one of your competitors, where they basically didn't account for any of the fees Opendoor charges. It'd be like saying, well, Apple loses money because they don't charge fees. It's stupid and insane.
But Opendoor does lose money, Keith. It hasn't been profitable on a GAAP basis, right? For the last few years.
Opendoor is profitable on a GAAP basis. If you look at last quarter,
what are you looking at?
For the year, we're going to be GAAP profitable. Almost, it's hard to tell because quarter 4 hasn't occurred.
But it's not profitable, Keith. We'll show you the numbers. We'll show you the numbers right on the screen right now. Lost money on a net loss basis in 2021, 2020, also the first few quarters of this year. What are you looking at?
No, show me quarter 2. And first of all, GAAP also includes non-cash expenses, as you know.
But GAAP is net losses.
No, it includes stock-based expenses, which are fake. Now, secondly, for 5 years in a row, literally 20 quarters, on the home basis, on a per home basis.
This guy's smoking.
He's no longer the CEO.
Okay, yeah, what an idiot.
Dude, he goes, they include stock-based compensation, which are fake expenses. And he goes on, he gets and you can tell I actually thought she did a really good job because she's pushing back, and you should push back on that. It's wait, what? Saying insanity. I don't know if they did a reverse. I don't think Opendoor did a reverse.
It would make
stock
sense
split.
if they did.
I don't. Let me see. I don't know because they went down and then they rallied.
Oh yeah, in 2023 they.
Mm-hmm.
Yeah, no, I don't think they did. Wait, keep playing. I want to see the yelling.
Oh, hold on. Let me just.
Obviously, there's operating expense and there's scale in the business. We hire a lot of engineers. We run a lot of product innovation. Like any company, virtually every.
Does he have a nervous tick that he's looking up like this?
Similar characteristics.
I don't know.
But fundamentally, all you have to do is look at an operating basis. Opendoor has been profitable for 20 quarters in a row.
Okay, but I have to clarify. That's a non-GAAP basis under generally accepted accounting principles, Keith, taking net losses.
No, absolutely not. That's stupid. Gross margin,
we'll leave that for another time. Maybe an accountant can talk to us. I want to move on.
Margin, do you not know what gross margin and contribution margin are? Those are GAAP accepted terms. Opendoor has been profitable on a GAAP basis, on a contribution margin and gross margin basis for 20 quarters in a row.
Okay, maybe we'll get an accountant to weigh in here, Keith, but I want to move on a little bit.
That's saying, that's for the gross margins. That's like saying, if you don't count any of our employees in order to get the job done, we're making money.
and maybe he didn't end up yelling. I thought he did. I could go through it, but that's not a nervous tick. He's lying. That's what Kale's saying. He might be right.
Holy crap.
Do me a favor if you don't mind.
Mm-hmm.
My computer's bugging a little bit. Can you stop me from sharing my screen?
Done.
Yeah, I think that should help me with just being able to. Okay, things are slowly coming back. Sorry.
Andrew's they saw my stash of shorts.
No. I'm going to reload the page actually for a second. Give me one. I'll be back in 1 second.
No worries. All right. As we lose Andrew, because we have to censor what he's saying. Yeah, I think with like the questions that we got on Amazon, I don't think there's anything wrong with Amazon retail, because that's, I think, where your comments, Bubba the dog, are kind of geared towards. It's like Temu taking Amazon's lunch. I don't really think that's a fear that I have. I love that you changed your name. SBC is a fake expense.
Hey, you catch that quick too.
Yeah, well, I read everything.
Mm-hmm.
So
Dex, the puts haven't really moved in price, just FYI. But
do you have any other topics you want to cover? Because we covered everything.
I don't think so.
I will say we had this question. I'll be brief about it. We had a member who pitched SMCI at $88, and he caught that when it was that low. The issues that they're talking about right now, they were all prevalent back then.
You know, he literally called on. He's like, he basically even said, like, because in his pitch he's like, this stuff's really sketchy, and I might get out. And I think that's why he got out somewhat. Like, I think he only made like 3 or 4x probably. I think
only 3
like,
or 4x.
Yeah, but like that's why he got, which was obviously, now you look at this and say he made the right decision. It's like process over outcome again. Like, he kind of looked at it and said, there's a lot of stuff going on that I know that eventually the market's going to find out. I don't know when they're going to find it out.
Apparently, market found out in 2024.
Yeah, well, and now they're having to delay their 10K, which is an issue.
Huh.
That's why they're down today.
Yeah.
So, but yeah, I mean, like, CEO gave a loan from the company. The company's a loan to like his brother. The 2 suppliers they use, they're like, SMCI is like their only customer, and I think he's related to both of the CEOs. And so now there's like accusations of like channel stuffing and stuff, which to me could very well be true. So, but short sellers are evil.
Short sellers are evil. This is a fact. This is true.
This is well known. It's common knowledge. I don't know why people think anything else. No, I don't really have. Okay. I'll play a quick game with you and then we'll hop off.
Sure.
What is your prediction for the market for the rest of the year? Q4. We're almost in Q4, so we basically say Q4.
I think September, turbulence, and then followed by rally, modest rally to decent, okay rally through the rest of the year, post-election in particular.
Gotcha.
But
I don't think
turbulence in September.
I think that the net S&P 500 is going to be kind of muted. Like when you it might be up and down a little bit, but when you smooth it all out for the rest of the year, it might be up or down a few percent, but I think it's going to be relatively muted. I think you could be right in the turbulence near term. I think there's been a bit of a rally lately on the idea that rate cuts are going to come. And I don't
think that's good for all stocks.
I also don't know if the market's pricing in why they're coming down.
Mm-hmm.
So, corporate tax impact on markets.
I mean, if corporate tax rates go up, profits go down, multiples react.
Yeah.
Simple.
Now the question is like how they phase it in, because if it's like something, because it could be a thing where they announce it and it drops on the news, but it doesn't actually, because usually they announce it if there isn't something like that. It doesn't go into effect for a couple of years. And then usually how taxes work is it steps up, right? If someone, I mean, that'd be idiotic, although with politicians, I don't know, be idiotic to introduce like a tax like that.
Yeah, but I think the tax cuts are expiring, no?
Oh, is that all it is? It's just
because it sunsets. It sunsets in 2025.
The TCJA, okay. Well, is it possible that one of the parties doesn't just extend that?
I mean, it would.
I'm just
I know that
asking.
the corporate tax rate was permanently cut, so that I don't think would rise under either administration because you need more than just the presidential
Oh,
seat.
so then what tax rate will go away in 2025?
Certain credits, I think
Oh.
will be extended. I'm trying to think.
He said Dems are proposing to increase corporate tax rates to 20%.
Don't think it's possible. I don't even know why. I mean, we're already fairly high for a lot of developed nations. I mean, we were really high at one point. Like we were incredibly high.
It's because probably because it sounds good.
Well, here's the thing, though. Do you see the data on tax receipts with tax cuts? So the tax rate was reduced. Tax receipts actually, I think, went up that year, and we just continue to go up. Because, fun fact for everyone, GDP is a greater predictor of tax receipts than anything else. If you grow GDP,
I think 1 year prediction is kind of rough, like because there's so much that could happen in that 1 year. That's abnormal. And with the government spending that we're having, I mean, those guys could have just been impacted by that.
So I don't know about it being
this market is so overbought.
I don't know what in particular you're looking at that's overbought. I mean, I just said what I said. I think about September, but I think there's going to be turbulence. But I don't think with all stocks.
I agree with FinTech Boy. It's complicated. Yeah, that's what I'm saying. Like looking at like 1 year, even for the size of our economy and everything, is so difficult to.
No, there wasn't forced reshoring. There was opening, so they could return, and they wouldn't be punished, or there wouldn't be a tax implication for returning. It wasn't like a forced, because that's a complicated diplomatic issue with the United States. We have allies all around the world that, for reasons, we want to maintain as allies. And so you don't want to just declare economic war with all your allies and say that our companies can't, domicile in your territory, because plenty of other countries want to compete to be a good place for capital to reside. And we also want them to be our allies for a variety of reasons. So it'd be highly isolationist to do the other way. And I think for the most part right now, Dems are less isolationist. So they're unlikely to cut on that. I think different, because it's tough to talk about politics in like a blanket statement of Republicans, Democrats, because there's factions within the Democratic Party and there's factions within the Republican Party, and different factions might have different power at different points in time. So I would say like the current most powerful faction within the Republican Party is more isolationist, and the current most powerful faction within the Democratic Party is less isolationist. There are factions within the Democratic Party that are very isolationist, by the way, but I don't think they're going to have much sway.
Yeah, politics isn't my strong suit. I usually find out things from like you guys and like, oh, these people did this. Like, I don't follow that closely, so we'll just react to that stuff.
Yeah.
I think generally in the U.S., honestly, this stuff moves so slowly that you have time to react. Like the policy gets passed and it doesn't go into effect for 2 years. Ooh, Powell's cheap again? Okay. Ooh, it did drop. Okay. I'll have to check it out. But anyways, volatility is OP. But that's about it for me.
Yep.
I think,
same thing for me. All right. With that being said, everyone, thank you guys so much for joining us today. If you're curious about checking out the Capital Mindset Club, the link is in the description below. If you're new to the channel, welcome, and you can like, share, and subscribe to this video. If you're on Twitter, feel free to follow me on Twitter. Like the video on Twitter. If you're on Twitch as well, like it on Twitch. Thank you for all 210 of you that are watching here today. I really appreciate it. and we'll be seeing you guys on the next one. Bye. I'll leave you guys with the outro, as always.
We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.